There we go. There we go. Video capture. Get rid of that one. Get rid of that one. Let's put another one in there. Video capture. Okay. Oh, there we go. Okay, let's drop this down to right about there. Do that. Do that. Start streaming. I think we are. Ooh, wait a second. Just about ready. Hey, Cos and Astros in the house. Woohoo! All right, give me a second. Give me a second. I'm going to get the ball rolling. All right, we don't need this. Get this out of the way. Get this out of the way. We want this right there. Outstanding. And. Right there, right there, right there. Yeah, we're ready to go. Good evening, everyone. My name is James. This is Dividend Stock Talk brought to you by the 10. Oh, I got to fix this. Sit tight. Sit tight. I'm getting there. Almost ready. That works. Oops, come on, come on. Come on. That works. One more second. There we go. There we go. There we go. All righty, all righty, all righty, all right. So, as I was saying, good evening, everyone. I am James. This is Dividend Stock Talk brought to you by the 10MinuteTrader, where I invest in dividend stocks for weekly cash flow, looking for a simple, safe, predictable, consistent 1% per week. And if you do some quick little math, 1% every single week is going to be 52% or more on an annual basis. It's a little bit different than what you've seen before. We don't do annual. We do weekly cash flow. Weekly. So every single week, every 7 days. All right, that being said, let's say hi to who's in the house tonight. We got KJ. KJ's always here. How you doing there, KJ? All right, we got D, we got AS. Take a Beal. Okay. People may be on their way, letting more people know. Okay, that works. That works. Steve-O. AB, what's happening? Richard, Tulsi, Tommy, Trina Lee, Rambling Man. I'm a rambling man. All right. Cause and Astros in the house. Anthony, I am the walrus. I am. Wait a minute. I am the walrus. Cuckoo, 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 cuckoo. Okay. Dennis, Gold Bull, Colt, Tollgate, Exotica. Okay. Where's Exotica? Right. Okay. KS, Candle Talks, Scott, Will, Steve, Aaron, Mike, Dennis the Dent. Dennis the Dentist. Okay. Demetrius. Okay. Rob, Alvin, Ozfellows, UK, whatever. The Cat Lady. Debash, what's going on? Las Vegas. Yeah. I was in Las Vegas. I was not impressed at all. Eric the Gray. Hernan. Alvin. McCurvus. Okay. Mike Bryan. Crystal Ball. Ooh, my sister's name, Crystal Ball. Filito Sweetopola. Okay. Alvin. Okay. I hope you had an awesome trip. No, I did not. We'll get into that a little bit later on. David, how's it going there, Mr. David? How are you doing? Who do we have over here on the other side? Okay, Japanese Stallion. Okay. KJ, Michael, Cool Arrow, Mad Manta. Okay. Cam, Richard, Lisa Marie, Steve-O, Steve Areno. Cool name, dude. Deep Toadster. All righty. Jay Nadem. Okay, Cool Arrow. The guy. All right. Carpe Diem, Magic, Fun Robot. Okay. Cesario. Hey, Ben Hari. BP Ben Hari's here. Wrangler, good evening. BF Trades. Okay. Lup. Okay. Ricano. Okay. Sweet Opa. Maverick. Phoenix. Yash. Okay, so good evening, everyone. Like I said, I like to say hi to everybody. Who do we have down here? Jeff Jackson. What's happening, Jeff Jackson? Okay, so what I'm looking to do is share with you what I taught my 9-year-old daughter. Because in 2008, she said, Daddy, can you teach me? Well, she's referring to investing in the stock market. So my 9-year-old wants to invest in the stock market. Okay, fine. How do you explain it to a 9-year-old when most adults don't get it? Most adults have a difficult time trying to understand investing in the stock market. So let me go quickly. Curly, Nancy, how you doing? So quickly, to create a trading strategy for a 9-year-old little girl, it had to be simple. It had to be safe. It had to be predictable, consistent, and no way for her to lose. That being said, I came up with 5 simple rules with the strategy. Number 1, never buy anything you do not want to hold on to long term or you do not understand. If you don't understand it, you don't want to hold on to it, you shouldn't be buying it. That's rule number 1. Rule number 2, never sell for a loss. Flat out, point blank, never sell at a loss. Number 3, make sure the company is consistently profitable. Now, when I say consistently profitable, for myself, I'm looking for 2 decades of profits. Okay, it's easy to see. We can look at earnings per share. We can look at the dividends. If they continue to increase, that means they're continually making money. Rule 4, make sure the company has weekly options. I don't want to take a look at it if it doesn't have any options or if it doesn't have any weeklies. It just doesn't make sense. And then rule 5, make sure all the numbers work. Now we are going to go over some sample trades. Every night I look for five good companies. Well, I'm back home now. See, I was on the road for the last 2 weeks. Didn't have all my toys, so to speak. So I was just winging it. That being said, we look for 5 stocks every night. So you guys label off something you want me to take a look at. But let me explain something. I'm 62 years old. I do not have the luxury of being wrong, which means very, very, very rarely do I ever lose. Okay, last year I think I did like 3,500 trades. I had 2 losses. 2 out of 3,500. This year I have over 1,000. I have 0. Dammy, thank you very much. 1% weekly ROI is not sustainable. You're new here. Thank you for coming. Thank you for your input. Sit tight for a minute. As the night progresses, I'm going to show you 5 companies that will give you over 1% for the week. Now, hypothetically speaking, if I take what's in my account and I buy good quality companies that give me over 1% every single week, that's my goal. 1% or more every single week. So, if, damn me, I have $100,000 in my account, I want a minimum of $1,000 per week. So, you want to go head to head? Let's do this. You tell me why it won't work, and I'm going to show you why it does work, because I've been doing this for over 15 years, and I'm not trying to sell you anything. So it's not as if I have an ulterior motive other than I'm creating a video log, a video diary for my children, my grandchildren, my great-grandchildren. Because when I'm gone, I want them to have this information so that they can go back and say, hey, this is how we do this. All right, so I do appreciate your input. I really do. But we'll take a look at it, and I will take a look. Wait a minute. DM if you are into crypto investments. All right, I don't appreciate that, so I'm just going to void you out of here because I don't do that kind of stuff. I don't go to other people's websites and try to promote my stuff. So I don't want to do that. Come on. Come on. There we go. Block account. Yeah, I don't do that kind of crap. All right, let's go back. All right, so where were we? Where were we? Crystal Ball, thank you for that. Hello. Filito, Swede. All right. Well, oh, wait. Where are we? So Dammy wants to take a look at how we do that. Muffin, VOO covered calls, never go wrong with that. Now, Muffin, you want to be the first one on the list? Let's take a look at VOO, and I'm going to tell you why I don't like it. Okay, it's a simple reason why I don't like it. Now, let's take a look at VOO for the fun of it. Okay, VOO. Okay, all right, here we go. Number 1, I ain't buying anything at the high of the year. 665 is the high of the year. Buy low, sell high. Why am I looking at this if it's at the absolute high of the year? That just makes no sense. I mean, think about it. Look at your last 30 days. Okay, we were at, what was that, 580? 580 and jumps up to 665. That's an $80 increase. That's a big jump from here to here. So normally what happens when you get a big jump like this? Normally you have profit taken. Boy, you crazy. Boy, you 2 kinds of crazy. Hey, how you doing? Okay, good. So I don't buy at the high. It just doesn't make any sense to me. Okay? Demi, EEH, depending on the asset, you can find a safe enough delta that you can offer enough premium. Absolutely, I'm going to agree with you there. Okay, I got to go back to where we were. Where were we? Okay, right there. Here we go. Muffin, VOO. Okay, so number one, I don't do VOO. Let me tell you why. Okay, here we go. We're going to go over to this website here. This is Yahoo Finance. Now, Yahoo Finance is going to tell me all the information I need to know about a certain company that I'm looking at. Great. You want to take a look at VOO? Let's take a look at it. Okay, number one, we want to go there. Okay. And we want to do VOO. Okay. Waiting for the history for VOO. Here it comes right here. Okay, Vanguard S&P 500 ETF, electronically traded fund. And don't give me that crap. It's an exchange traded fund because it isn't. Every single exchange is electronic. It's computerized. You're giving your money to a computer to tell you what you can and cannot do. All right, so this is the data stream. It gives me the opening price, the high of the day, the low of the day, the close, the adjustment, and the volume. It tells me everything I need to know about the stock information. Okay? What I'm more interested in is this right here, the dividends. Because number one, this is a dividend channel. My main objective is investing in dividend stocks for weekly cash flow. My goal, again, is 1% a week. Let's take a look. So I want just the dividends only. All right, now for VOO, I want to see all the dividends. So let's take a look at all the dividends. Here they are. Now, in my humble opinion, I'm looking for something that is consistently profitable for 2 decades. That's 20 years. So let's go back 20 years with VOO and see what it looks like. I got a minor problem. 2010, which means this is not 20 years old. So number one, it doesn't fit. It's not 20 years old. Number two, 2010 to 2026 is only 16 years. Close to 20. All right, we'll let it slide. But let's take a look at the numbers. Now, if a company is profitable, they pay out dividends. If they make more money year after year after year, the dividends increase incrementally. 1, 2, 3, 4, 5, so on and so forth, higher and higher and higher. However, if the numbers go backwards, that means they did not make as much money as they did the previous quarter or the previous year. So let's take a look at numbers. Are you ready? First one, 55. The second one, 52. Right off the bat, what the hell? If your first dividend is 55 and the second one is 52, that means they're not making the same amount of money. They're making less. Because once the profits that they're sharing decrease, that means they're not making as much money. But let's keep on going. Let's do this here for a second. Okay. 55. Lower. Higher, 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 lower. Higher, 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 lower. Not good. That's 3 times. Hold on. 1, 2, 3. Okay. Now that says March 2013. All right, right there. Okay, lower, higher, higher, lower. Higher, 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 lower. Higher, 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 lower. Higher, higher, lower. Lower, lower. 1, 2, 3, 4, 5, 6, 7. 7 times it went down. 1, 2, 3, 4, 5, 6, 7. Okay, this is September 2016. Okay. Higher, lower, higher, 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 lower, higher, 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 lower, lower, higher, lower, higher. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. June 2020. Let's keep on going. June 2020. June 2020. Right there. Lower, higher, lower, higher, lower, higher, lower, higher, 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 lower, higher, lower, higher, lower, higher. 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. 2024, June 2024, right there. June 2024. Lower, higher, higher, lower, lower, higher, higher. 1, 2, 3, 3 more. 1, 2, 3. Okay, so you like VOO. Well, great. Wonderful. Number one, it's only 16 years old. And 5, 10, 15, 20, 25. 25 quarters, this thing went down. Well, think about it. Now, if you're going higher, 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 great, wonderful. It consistently goes higher. But if you're going higher, 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 lower, higher, 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 lower, higher, higher, lower, why? Why would I want to invest in VOO if it's not consistently profitable? And it's over $600 a share. That's another one. Okay? But let's take a look at one more thing, just for the fun of it. We're going to take a look at the summary, okay? The summary right here gives me an idea of what's going on with the company. Okay, summary. Summary, there we go. All right, we're going to come up with the summary. The summary is going to give us the yield of how the company is performing based on all the performances that they've been doing. So what's taking so damn long? No, it's going so damn freaking slow. Oh, right. Well, whatever. So my concern is you're being sold VOO. Okay? Vanguard S&P 500 ETF VOO. It's $665 per share. The yield. Okay? Are you paying attention to who gave me VOO? Who gave me VOO? Medlin. Okay, right there. Who was VOO? All right, Muffin, you gave me VOO, right? Now, the yield is you take all the profits that they give you, all the dividends, you divide it by the price, 666, whatever the hell it is, and the yield is 1. Hold on, I make this big letter so you can see it better. You ready? Right there. 1.19% for the year. How can you possibly tell me 1.19% per year is a good investment? I'm waiting. Seriously, you think VOO is good. You take the yield, you take all the profits that they give you, all the dividends, you divide it by the price, 6, whatever it is, and you come up with 1.19 for the year. I'm showing you how to get 1% every single week. Think about it, 1% a week, but you prefer 1% a year. Explain to me in a manner in which I'll understand why you think that's good. I'm serious. Okay, Demi, I'm still going to show you one. All right, so let's get out of this. Needless to say, I don't like VOO. And the reason I don't like VOO is because the profits they share with you aren't that good. 1.19% for the year does not blow wind up my skirt. Doesn't do anything for me. Sorry, Muffin, I'm just going to say no to that one. Crypto Vice, thank you for that. Con Perez, MDLN. Now, I'm going to be 100% honest, dude. I have no idea who this is, and that's never a good sign. Now, I've been investing for 30 years. I've never heard of this company. Why is that? Okay, it's a monthly. That's why. I don't do monthly. Remember Rule 4? Weekly options only. Let me briefly explain why. May, June, July, August, November, January. Those are months of the year. We all know that. Okay? 12. So if I'm getting 1% with every single trade, that's only 12% by the end of the year. Still a hell of a lot better than VOO, but 12%. No, I want 1% every trade, but weekly, every week after week. That's over 50% per year. Who do we got over here? Subhan Shirik. Okay, hello. I can't read that other name, so sorry about that. Tina. All right, let's keep on going. Wait, how do you do weekly options? Oh, Muffin, sit, chill for a second. Number one, you need to find stocks that have weekly options. The easiest way to do that, you ready, Muffin? CBOE.com, Chicago Board of Options Exchange. That's all they do, options. Okay? Go to Chicago Board of Options Exchange, CBOE.com, and right at the top left, right-hand corner, weekly options. It'll give you every single stock, every single ETF, every single everything that has a weekly option. There you go. There's your answer. Okay? Now, let's get rid of this. All right. So, no to that one. All right. Joey, Mickey D's. I love Mickey D's. Muffin, you ready for this? Here we go. Mickey D's, MCD. First thing I always want to see anytime I look at any stock is 5 things. I look at the 1-year chart. I'm looking for 5 things, and it takes 2 to 3 seconds. You think I'm kidding? Watch this. High, low, was, is. That's it. Okay. The high of the year. The low of the year. Where was it a year ago? Where is it now? And what is the flow? What are the buyers and sellers doing? Down, up, down, up, down, up, down. What's going on right here? This today is the low of the year. You've heard it over and over and over again. Buy low, sell high. Please tell me you have heard of McDonald's. There's 1, 2, 3, 5, 7 McDonald's in every city. Almost every major city has a McDonald's. So what I want to look at is after I look at the 1-year chart, 5 things, the high, the low, all that stuff. Now I want to take a look at the numbers. Remember, rule 5, make sure all the numbers work. Now this is where it comes to point. Ready, Muffin? If I'm buying it for $285, I'm going to sell it for $285. As a matter of fact, I'm going to give you the example of buying it at $285, selling it for less than I paid for it, and still walking away with the profit. You ready, Muffin? Who else am I talking to here? Wow. Right there, Dammy. Okay, Dammy. Dammy and Muffin, you ready? McDonald's. I'm going to buy it, $285.17, sell it for less than I paid for it, and still walk away with a profit of at least 1%. At least 1%. You ready? Here we go. If this is the current price, this is what it's doing. Okay, normally she goes down, up, down. Now she's going to turn around and go back up. This is not suggestion. This is not a tip. This is not advice. This is an example, an observation. I'm just showing you how it works. Number one, you got to find a company you like. Well, if you don't like McDonald's, I don't know what to tell you. They have over 25 years of increased profits year after year after year. More money, more money, and more money. Okay. So, let's do this. You ready? Let's get rid of this. Now, first thing I want to do is I want to change it from single to covered. So it's a covered call. It's one of the simplest, safest strategies there is. The 285 right there. Here it is right there. And here's the order right there. I love Think or Swim. Now, this is offered through Charles Schwab. Everything is preset. It's simple. Once you get comfortable, it's kind of like riding a bike. Oh, you know what? It's kind of like getting a new car. It's weird at first, but after you know where everything is, it's pretty simple. All right, so 285. I want to do just one contract. Whoops, a little too far. One contract. All right. All right, this is what it should sound like. This is what it should look like. Are you ready? Buy one. Covered call. McDonald's MCD. The option. 8 May 26th. That's this coming Friday. The strike price, $285. So I'm buying it at $285.17, selling it for less than I paid for it, $285. And then I'm going to pick up $402 per contract. More contracts, more money. but it's the safety factor that I'm looking for. Number one, McDonald's is a dividend aristocrat, meaning it has 25 years. That is a quarter of a century of increased profits. That means every single year, higher, 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 higher. They make more money this year than they did last year. More money last year than they did the previous year for 25 years. You think that's good? You should check out the Dividend Kings by decades. That's a half a century. But anyway, McDonald's, let's check this out. So here's my profit, here's my investment. Now, I'm not looking at this as if I'm buying stock. I'm looking at it as if I'm creating a weekly cash flowing asset. Now think about it. I've traveled around a lot. Now, I give the example or the metaphor or the similarity to give you an idea of how you can look at it differently. So if you think about it as creating a weekly cash flowing asset, well, I will never, rule two, never sell less than what I paid for it. This example is a little bit different, but let me show you and you'll understand what I'm talking about. All right, that's the profit. This is my investment. Great. Now, to find out what the rate of return is, we're going to need a calculator. I'm good with numbers, but I'm not that good. My profit is 402. And my investment, you ready? Cost of the trade, including commissions and fees, 28,000. Okay, divided by $28,098. It comes to a grand total of 1.4% for 1 week. Damn, did you see that? McDonald's. If I buy it at the current price, sell it at the exact same price, I'm getting 1.4% for 4 days. Monday's gone. I lost 20% of the possible income I could have gotten because a dividend stock option has a component called theta decay. It's a little complicated, but as the days go by, the value or the time value slowly decreases. So if I sell an option on a Monday, I've got 5 days. 20%, 20%, 20%, 20%. That is a 100% of the time value from Monday morning to Friday afternoon. That's it. You cannot get any more time value from Monday morning to Friday afternoon. 9:30 a.m. Monday morning, 3:59 p.m. Friday afternoon. That's the maximum. Well, Monday's gone. I just lost 20%. Had I done this yesterday, I probably would have gotten, well, had I done that this morning, I probably got a little bit more. But let's take a look at the numbers. So I like McDonald's. I'm going to save it. So let's save McDonald's. That's going to be number one for today. Mickey D's. Got to love you some Mickey D's. All right. Let's check this out. New week. Look at this, a blank board. What do we got? There it is. Mickey D's. Yeah. Oh, I missed my little toy. Woohoo! All right, here we go. McDonald's. 8 May 26th. That's this coming Friday, 4 days from now. The 285 call option means I'm buying it, selling it almost at the exact same time. I'm going to buy it first, then sell the option. Okay? Then I'm picking up 402, and the 402 is going to cost me $2,800, which is 1.4% for 1 week, 4 days. So, Cammy, I hope you understood that one. All right, we'll put this right there. I'm going to do 1.4. Ooh, that's kind of terrible, isn't it? All right, whatever. All right, let's do this. Let's do this. And let's go Monday. All right, Monday, we got Mickey D's, 1.4. All right, let's go back to it. Next. Joey G said it works for him. How is the car? Mike, here's the funny thing. Okay, we left LA, went to Vegas. Okay, we hung out in Vegas. No, we're in LA for about 5 days, driving car all over the place, not a single problem. We went from LA to Vegas, not a problem. Driving around Vegas, great. We dropped the kids off at the airport, and then we just hauled ass east on Route 66. That's the whole plan. And then the car overheated 14 miles out of the Boulder City. So we turned around, brought it to mechanic. Mechanic said, you got a crack in this little manifold here. Let's get it replaced. We got it replaced. He says, you're good to go. All right. We jump in the car and drive off. We hit 14 miles and overheated again. I called him and said, dude, hell with this. We're putting the car on transporting it back to Florida. We jumped on planes and hell with it. I guess it's a sign from the powers that be. He didn't want me to do Route 66. So the car is being shipped back. Muffin. Depending on the asset, you can find a safe enough delta. Yep, I'm going to agree with him there. Flywood. This will absolutely work. Not sure why someone will be challenging it. Thank you there, Flywood. Ooh, BP wants to take a look at Home Depot. Now, for those of you who aren't aware, Home Depot is one of those very few companies that is what's called a dividend king. A dividend king, Cooper, what's happening? A dividend king is a company that has increased its profits year after year after year for 5 decades. I got to put this down for a second. You ready? 5 decades. That's 10, 20, 30, 40, 50 years, consistently increasing their profits year after year after year. Well, anytime a dividend king pops up, it's an absolute yes for me, providing it gives me 1%. All right, so let's throw Home Depot in here. Home Depot. Here you go. The high, the low, where was it? Where is it? Up, down, whoops, right here. Again, same thing as McDonald's. Fitz here, dude, what's happening? Haven't seen you in a couple of days. How you doing? All right, so last 30 days, take a look. Remember, you never get a chance to buy any lower than the low of the year, and that is today. Home Depot, bottom of the year right here. Now, I would wait another day or two for it to make sure, because tomorrow it could go lower. We don't know. It could. All right. So, down, up, down. Now she can turn around and go back up again, because that's what they do. Let's take a look at Home Depot. All right. So, that being said, 315, 315. The 315 is going for $4. That's over 1%. Uh-oh. Can someone tell me why we only have 3 days this week? Monday's gone. So what day do we have off this week? 1 second. What day do we have? What holidays this week? Good Friday? Memorial Day? No, because there's 3 days left. Yeah, no, but what day is the market closed this week? No. There's 5 days in a week. Monday's gone. There's only 3 days left. Which day are we not? There's got to be one. What's today, Tuesday? Wait a minute, today's Tuesday. Is today Tuesday or today Monday? Ooh, this is what happens when you retire. So let's find out. I'm sorry, I'm retired. Holy shit, today's Tuesday. I missed a day. All right, so today's Tuesday. We have 3 days left. Okay. All right. Sorry about that. I wasn't quite sure. Okay, so Home Depot, 315. The 315 is going for $4. Let's take a look at Home Depot. Dividend King. Why the hell not? Same thing. Let's change from covered call. The 315s for this week. One contract. Here we go. Who do we have down here? Market closed for Cinco de Mayo. Nah, I don't think so. All right. So here is Home Depot. You ready? One covered call. Home Depot. 8 May 26. That's this coming Friday. It's 3 days away. I thought it was Monday. I did. Seriously, I thought it was Monday. The 315 call option. Well, the profit is 408, 31. This is almost the exact same as McDonald's. 408 profit, 31,000 investment. Well, Home Depot is a little bit more money than Mickey D's. All right, so let's find this out. Calculator. 408 is the profit. We divide it by, whoa, wait a minute, wait, cancel. 408 is the profit. We divide it by the investment. Because remember, we have to buy 100 shares first before we sell the covered call. Uh-oh, there's no audio there? Sorry, Fitz. We'll have to get rid of that camera. That camera has. All right. So anyway, sorry. We're divided by the $31,092. 92 gives me a grand total of 1.3%. Okay, Mickey D's 1.4. Okay, Home Depot 1.3. Remember, I'm only looking for good quality companies that are around over and over and over again. Okay, so 1.3. Let's save this one. Home Depot. Here we go. Home Depot. Where are you? Come on, come on. There we go. Home Depot. All righty. All right. Whoops. Oops. There we go. All right. Home Depot, 8 May, the 315 call option. Okay. 408 is the profit, 31,000 is the investment. Now remember, anytime you make an investment in money, make sure you actually like the company you're putting the money into. Remember rule number 3? Make sure the company's consistently profitable. Oh my goodness, big brain. How you doing, dude? Nice to see you back again. $1.3. All right. So let's go back to right here. What we have next? Home Depot. We looked at that one. Rich C, how you doing? BP wants to take a look at Ford. I like Ford. Ford's on my list. Covered stock back here, back there, and some Ford. Let's get rid of this one. We don't need that one. Ford is. You ready? Here we go. As soon as she pops up. High, low, where was it? Where is it? Look at this. High, low, where was it? Where is it? What's the motion? Up, down, what's going on here? This is where I want to see. Now, the reason I want to see a whole year, I want to see what the high is, and I want to see what the low is. But more importantly, I want to see what the other investors are doing. Are they buying? Are they selling? Well, we're buying here, and it goes up. Then all of a sudden, we get to the high of the year from $10 up to $14 is a 40% increase. 40%. Profit taking brings us down to 11. Now we're going back here. So this is where we are now. I'm looking for the momentum. Okay, she went up, profit taking brought it down. There's the retracement. Now we're sitting here. Great. What's going to happen next with Ford? Same thing as the other one. The high, the low, where was it? Where is it? Up, down. Now she's going back up again. It's actually that simple. The strategy was created for a 9-year-old. 9. As a matter of fact, we haven't seen her in a while, so no, we're not going to do that. We'll do it tomorrow when I have a better connection. All right, so let's do Ford. 1169. Hold on. The 1150 is going for 25. Wait a minute. 12. Nope, I'm not going to do this one only because. Now, I like Ford, don't get me wrong, but I'm not going to do it because look at this. If I buy it at 1169, the current price after hours is 1174. So halfway between 1150 and the 12, well, the 12's only paying 4 cents. That's not 1%. But here's the thing. It's only for 3 days. Wednesday, Thursday, Friday. All right, so what if we take a look at next week? What's Ford offering me next week? Well, the 12s next week only go for $9. Still not 1%. Sorry, it's going to be a no. That's a no. Donovan, what day of the week do you enter a position for a weekly option? Monday. 98% of all my trades are on a Monday. Because on a Monday, specifically Monday morning, because there's only 5 days in the week, and the week starts at 9:30 a.m. Eastern Standard Time. and it ends at 3:59 p.m. Eastern Standard Time. Okay? So I get the maximum amount of time value Monday morning. If I wait till Tuesday, 20% is gone. If I wait till Wednesday, 40% is gone. So I always do it, always do it on Monday. Okay? So let's keep on going. So, Ford, not this week. Sorry. BP. Okay, BP, man. I want someone else to jump in. Okay? All right, so what do we have over here? What's going on over here, you guys? Okay, no comments over here. All right, not a problem. Down here, you guys on YouTube, what's going on? Jeff, what's going on? Has sank. What do you think of the ticker P? What the hell is that? Now, like I said, I've been investing for a long time. Certain companies I'd never heard of for a reason. Why have I never heard of this one? Well, it's not popping up. All right, there it goes right there. It's going to be a no. Who came up with that one? Has Sakura? No. The reason why I said no, okay, May, June, August, November, January. Those are months of the year. Months of the year, there's only 12. So if I'm getting 1 to 2% every trade, monthly, I'm getting 12 to 24% by the end of the year. Well, if I do weekly, I'm getting 50 to 100% a year. I'm retired, so I have nothing else to do. And this only takes 5 or 10 minutes a day. 5 or 10 minutes to get 1%. Depending on the size of your account is going to give you an idea of how much money you can make. So if you got 50 grand, 1% a week is 500. If you got 100 grand, 1% a week is 1,000, so on and so forth. So you have to decide what makes sense to you, where you're going to put your money. Because whether you agree with me or not is irrelevant, really. Because whether or not you take control of your money is one thing. If you don't, someone else is going to do it for you. Because when you're retired, you get 2 choices, and only 2. So don't think you're someone special just because, oh, it's me. No, you're not special. You have 2 choices. Do it yourself or give up accountability. Here, you do it. That's it. You got 2 choices. Do it yourself or let someone else do it for you. And I'm pretty sure nobody has more interest in your money than you. So, no to P, no to Ford. What do we have next? All right. Bungary, what's happening on? What's happening on? Good Con. Okay. Cranky Moore, Armin. Okay. K-Van, nice to see you there, K-Van. Aiden. Donovan. The Nest Restaurant. Okay. Richard's Canyon. Nice to see you again, Mr. Rich. How you doing? Pingadolo. Okay, whatever. Paul, how you doing, Rod? Dolvin. So does buying the covered call automatically buy 100 shares and then sell the option contracts? Absolutely. Now, you can do it in 2 steps or you can do it in 1. 2 steps, you buy the stock first, then you sell the option. Or you can do it the covered call, which buys the stock and sells the option all in 1. It's a choice. You can do either one. Same outcome. Wrangler, Donovan, Rob, Logan. Cam wants to take a look at one of my favorites, Macy's. Now, I've been investing in Macy's for about 3 years. 4 years. Holy cow, we're in 2026. Okay, 4 years. So if you've seen some of my videos go all the way back until 2022. Only because that's when someone put the camera in front of me and said, hey, press this button, do this. Yeah. So now I got 8 cameras in front of me, 8 iPhones in front of me, and all going to a different channel. So, all right, why is it Macy's popping up? It's not that difficult. Come on. Here we go, Macy's. First thing I want to see, always, the 1-year chart, the high, the low. Where was it? Where is it? Look at this, sideways, up, down, up, down. Macy's is going to be no this week because simply look at your last 30 days. Here's your top, here's your bottom. When it comes off of a 30-day bottom, she shoots up. gets to a point and people say, you know what, I'm going to take my profits, profit taking, boom, it's coming down. Now, I don't know where the bottom's going to be with Macy's. It can keep dropping, so not this week. Don't get me wrong, I love Macy's, I do. Do you ever try to enter a position by selling a cash secured put that's 1% of it? Sometimes yes, most of the time no. Now, Donovan, the reason I say this is the strategy that I'm giving you for free was created for my 9-year-old daughter. 2008, she jumped on my lap and said, Daddy, what are you doing? Can you teach me? That's what my 9-year-old daughter did. Can you teach me? Not, Daddy, can you buy me a dress? Daddy, can we go get a bunny? Daddy, can we get a hamster? Daddy, can you take me here? Daddy, can you? No. Daddy, can you teach me how to invest in stock? I'm trading my own money. She said, Daddy, can you teach me? What stock is this? This is Macy's. Austin, how you doing, brother? Nice to see you back again. Damn it, you got a question for me. Go ahead, shoot. Muffin. Well, the risk is, by the way, our stock's dropping, then you're stuck holding the bag. Also, price ripping past strike. Muffin, give me one. Give me one, and let me give you the answers. Okay, Dammy, let's get a question. Go ahead, shoot. Richard Scanyon, you lost the day. Yes, I did. Okay. So anyway, Muffin has an interesting question or an interesting scenario. Let me see if I can clarify a few things for you. Because Muffin, basically you're relatively new because I'm really good with names, and when someone shows up over and over again, I know who it is. Fitz here has been here plenty of times. Cam has been here plenty of times. Mama's been here plenty of times. Rich Scanyon's been here plenty of times. So, Dammy, you're new, and Muffin, you're new. Let me explain something to you just in case you missed it, all right? You ready? All right, Macy's, it's up on the board. You ready? Macy's, 24 bucks is top. The top, 24 bucks. The bottom, 10. From 10 to 24, back down to 17. Stocks do two things and only two things. They go up and they go down. Are you concerned that stocks go down? Hold on. I got some more for you. Whoops. Helps if I right there. AT&T. Oh, this is going to drive me nuts. Come on. Would you believe my modem is 5 feet away? 5 feet. So why is it taking so long? Damn thing. What I'm trying to get at, Muffin, is stocks go up, stocks go down. All right? If, come on, damn it. It's taking so damn long. If I buy 1,000 shares, come on, damn it. Okay. Ready, Muffin? The top, 30 bucks. The bottom, 23. So from $30 to 23 is a $7 drop. $7 drop on a $30 stock is roughly around 25%. The question I have for you, are you ready? If, let's do this right here. Okay, let's say hypothetically speaking, they're paying $1 dividend. Okay? $1 dividend. Ready? Now, let's say I buy 1,000 shares right there at 29 bucks. $1 dividend, $29 per share. I'm getting $1,000 because I have 1,000 shares, right? Okay, what if the stock drops all the way down to 20? That is a 25% drop. Okay, 25% drop. You said what happens when the stock drops. Okay, here you go. 25% from here to there is 25%. Now, I still own the 1,000 shares. The company's still paying a dollar dividend per share because I'm only looking at companies that consistently increase their dividends. It means profitable over and over and over again. So if the stock is at 30, drops down to 20, I'm still getting $1,000 every week. Doesn't matter what the stock does. As long as I own it, never sell. Rule 2, never sell at a loss. As long as the stock drops, I still own it. I'm still getting the dividends. What else am I getting? Hold on a second. Okay, your concern might be, let's get out of here. Let's do this right here. Let's do this right there. Okay, this might be your concern. Currently, the price is $25.90. Okay, so we have what is called ITM, ATM, and OTM. Okay, ITM, in the money. ATM, at the money. OTM, out of the money. It's going to come important. All right. Right here. Are you ready? This line right here between the purple and the black is at the money. The stock price, $25.90. Correct. Right here, $25.90. That is at the money. Okay? ATM. Now, $25.90 in the money would be 24, 23, 22, because the value is already there. That is in the money. Now, out of the money, remember, the stock is at $25.90. Out of the money is 27, 28, 29. Out of the money. Now, I own 1,000 shares. Allows me to sell whatever option I want. So let's see what the options are paying. Okay, so at the money right here, which is $25.90, the 25 is paying 60 cents per share. That is over 2.25% for 1 week. Okay, that's at the money, ATM, at the money. Donovan, sit tight for a second. Okay, in the money would be 25, and that's paying $1.01. But here's the thing: if I bought it at 30 and I sell this to 25, yeah, I'm at a huge risk of losing. No, I'm going to sell out of the money at least 2 to 3 strikes. 2 strikes out of the money, I'm picking up 18. Now, 18 on a $30 stock is over 0.5%. 0.5% every single week is still 26% per year. Owning the stock, even though the stock drops, if I sell 3 strikes, 1, 2, 3 out of the money, I'm still picking up 0.5%. Now, 0.5%, I'm not used to talking so much. 0.5% every week is still over 26% by the end of the year. I'm okay with 0.5%. Not my goal, but still. 3 strikes out of the money, I'm picking up 9 cents. 9 on a $30 stock is 0.3, which is 1/3. Still not bad. Okay, so as the stocks drop and the option values drop, I'm not getting as much as I'd like to, but I'm still bringing in money. And the reason why I pick certain companies, the companies consistently increase their profits. So if I buy AT&T and the stock drops 25%, I'm still going to sell covered calls against it. Only I'm not doing at the money anymore. I'm doing out of the money, and I'm only collecting 0.3 every week. Well, that times 50%. Let's try that one. Sorry, 52 times a year. So if I get 1/3, multiply that by 52 weeks, because it's 52 weeks in the year, that's still 17% for the year. So it's always going to be a numbers game. Number one, never buy something you don't want to own. I only like companies that are consistently profitable, which means they have at least 2 decades. That's 10, 20 years of increased profits. So as they increase their profits, that means every year my dividends get higher and higher. Why would I choose something that's not? Think about it. Okay, I check every Sunday. How many companies are there? this week, 11,040. 11,040 companies, yet only 350 actually pay consistently higher and higher dividends. That's it, just 350. Dividend kings, dividend aristocrats, dividend champions, dividend contenders, and anything on old Warren's list. Those 5 lists will give you 350 different companies to look at, all consistently profitable year after year. Let me show you what. No, I'm not going to do it because I'm having internet issues. Okay. Matthew, 1,000 a week. Matthew, I was giving the example if I had $100,000, 1% a week is $1,000 a week. That's the example I was giving. You're selling at the money options, I'm guessing. Absolutely. It's the highest rate of return on a stock. 25.90 at the money right here is paying 60 cents, which is over 2.25%. Okay, if I go out a little bit, the 26s, they're paying 36, which is 1.5%. If I go in the money, 25, it's paying $1, but I'm losing $1.14. You take $1.14 off that, it's just not worth it. It's a numbers game. Okay, in the money, it's a higher probability of being correct. However, the numbers, the percentages you're walking away with are not the same. It's always going to be a numbers game. Do you ever try entering? Yeah, okay, so Donovan, every once in a while, very rarely, will I do a cash secured put. Oh, I got some flowers. Yay, thanks, Muffin. I'm glad you appreciate it. Thank you. Very rarely will I do a cash secured put. Okay, so currently this price right here, $25.90. Well, the $25.50 is paying 19 cents, not even close to 1%. Okay, the 26s is paying over 1%, but I don't want to buy this at 26. I want to buy it at 25. It's a numbers game. All right, where did we leave off? Yes, it's Tuesday, damn me, I get it. Yeah, I missed the day. Traveling has a tendency to do that. So when things don't work when you're traveling, it's really challenging sometimes. C. Geyser, how you doing? Nunyo, what's happening, Nunyo? Superman's in the house. Con Perez, Julian, how do you calculate the risk of these options or trades? Great question. Julian, what I'm looking at is only the cream of the crop. It's the best companies we have. Yep, Cisco's on the list. Companies that have been around for over 5 decades. Home Depot, Lowe's, Bank of America, Wells Fargo, General Dynamics, IBM, AT&T, Verizon, MasterCard, Visa. The companies, you've heard of them all. Hold on, let's check this up for a second. Okay, we want to take a look at, oops, right there. Here we go. Now this, behind me, is a calendar. We all know what a calendar is. Monday, Tuesday, Wednesday, blah, blah, blah. Why is it taking so long? I'm having internet issues. All right. Julian, are you ready? Fast Terminal, Western, IBM, over 70 years old. Walmart, over 70 years old. EMR, that's Emerson Electric. ExxonMobil, Smuckers, Target, K-View, Consolidated Edison, PPG, Grainger, Aflac, Sherwin-Williams, GPC, Genuine Parts Corporation, Lennar, Aflac, Johnson & Johnson. Almost every single company you should have heard of. You know who Johnson & Johnson are. Over 140 years in business. 5 decades or more of increased profits year after year after year. Every single dot you see on it, every single one, has 25 years of increased profits. That's how I find good companies. Then I take a look at, well, the calendar. We have, we're in May 5th, which is right here. Okay, so next week we have PPG, Grainger, Smuckers, ExxonMobil, Emerson Electric. They're all paying a dividend next week. The reason why I only do dividend stocks is because this is something you really want to pay attention to. Dividend stocks have a tendency to repeat themselves, and they are predictable, meaning just before the dividend date, the stocks have a tendency to increase in value. And the calendar's right there. So if we're here, these are the stocks I'm looking at next week. It already tells me which. I don't look at all of them. I only look at the ones that have the dividend comes up. Because just before the dividend, the stock increases in value. And by knowing when the stock increases in value, gives you a tidbit of information, depending on how you use it. Okay, so I've been doing this for a while. And I ask everybody the exact same question. And 95% of people all say the exact same thing. If you knew a stock was going to increase in the date, what would you do? If you knew a stock was going to move, what would you do? Lucky, how you doing tonight? Nice to see you there, Mr. Lucky. So if you knew a stock was going to move, what would you do? Almost everyone said, I'd buy the stock. That's because you don't understand the numbers. A covered call is simple, easy. You'll get a higher rate of return. And buying a stock, you don't know how high it's going to go. Well, see what I'm doing. Remember, I said simple, easy. Wait a minute. Simple, safe, predictable, consistent, no way to lose. That's the 5 criteria. Well, the simplicity of what I'm doing is the covered call. Now, you can do a covered call in your IRA. That's how safe they are. Okay, now the easiest trade possible is just buying the stock. But the major flaw with buying stock, you never know when it's going to move. But a covered call, you buy the stock, you sell the option, and then you sell the stock for the exact same price you paid for it. And all I'm collecting is the insurance premium or the stock option premium. I don't care what happens with the stock. I really don't. Because I'm not looking to capture the dividend. I like the calendar to tell me when the stock is going to move. All right, GPC. It's going to move 2 weeks before that, so probably buy it on the 18th. Lennar, same thing, on the 18th. Aflac, probably buy that one on the 4th, which was yesterday. I give the stock plenty of time to move because that's what they normally do. They go up in value just before the dividend is paid. You got 4 dates to remember when it comes to dividend stocks. Number 1 is the date, the announcement date. Okay? Aflac, the dividend, the announcement date. That's when they tell you what's going to happen. Hey, everybody, my name is James. This is Dividend Stock Talk brought to you by the 10-Minute We made this much money. This is how you're going to get yours. They're just telling you what's going on. The announcement date, that's all that is. The second date, that's the important one. The EX dividend date. It's right there on the calendar, marked by these little green dots. That is the last day the stock trades before the dividend is paid up. That's the important date because you're going to buy, okay, GPC. I got to buy it in the 4th, the 3rd, the 29th, 13th, 8th, any day before this day. Okay, stocks have a tendency to go up just before the dividend. So knowing when the stock is going to move, okay, this week, or this week, okay, 2 weeks, that's it. So I buy it here. It goes up 1%. Thank you kindly. Date number 3, date of record. Whoever owns the stock on the date of record is entitled to the dividend. That's it, plain and simple. Date number 4, the payment date. So dividend stocks have a tendency to move just before the EX date. Knowing that ahead of time and coupled with a simple, safe strategy. I buy the stock, $100. I sell a stock at $100. I collect the premium. And the premium is always 1% or more, or I don't buy it. It's actually that simple. Take a look at the calendar. What am I looking at this week? There they are right there. 11,000 different companies. I'm only looking at 300 because there's 4 quarters. January, February, March, April, May, June, July, August, September, October, November, December. Here's the funny thing about the 4 quarters. They all have 13 weeks. And 13 weeks, the first week of the first quarter is the exact same as the first week of the second quarter. Same as the first week of the third quarter, same as the first week of the fourth quarter. And then you start all over again. 1, 2, 3, all the way to 13. 1, 2, 3, all the way to 13. 1, 2, 3, all the way to 13. It's repetitive. They do the same things every 90 days. So why wouldn't you? Remember, the strategy is created for a 9-year-old. 9 years old. Said, Daddy, can you teach me? Okay, great. There you go. Find a good company. Dividend kings, dividend aristocrats, dividend champions, dividend contenders, Warren Buffett stuff. That's it. Put them into the calendar. The calendar will tell you exactly when to look at them. You look at them. What do I want to see? Well, the very first thing I want to see is the chart. And I want those 5 things. The high, the low, where was it, where is it, sideways, up, down, up, down, up. Okay, simple. It is that easy. Adults have a tendency to make it more complicated than it needs to be. Okay, Lucky, sorry about that. Apparently we're having issues with this camera. Sorry, Lucky. Okay, Lucky, you've been here for a while. I don't know how you end up on this channel, but there's 13. Okay, I'm live streaming on 13 different platforms. So just pick a different one. I'm going to have to change the camera on this one because that one's just having issues with it. All right, that being said. Sleep numbers. Thank you, Lance. How you doing, Lance? How do you calculate the risk? We already did that one. Con Perez, how you doing? Luke, I am your father. Nick, ExxonMobil. Nick, why do you want to take a look at any oil stocks? All that trouble they're having on the other side of the planet, you're not going to get anything decent on any oil stocks. I definitely got to do something about it. It's going to drive me nuts. High, low, where was it? Where is it? Up, down, up. Well, let's zoom into that. Does that make sense? Well, let's take a look. 30 days ago would be right there. Here's your last 30 days. The high, the low, where was it? Where is it? Look at this. Up, down, up. Okay. 142 to 154 is 12 bucks. 12 bucks. From the bottom to where we are today, $12. $12 on a $140 stock is right around 8%. Not huge. Still have room to grow. Look at this. Here's where we are. Here's the high. If all that space right there. So what's ExxonMobil look at 154.88? 154.88. Well, I want to sell the 155s. It's the closest one. And the 155s are going for $3. That's 2%. Let's check it out. All right, get this out of here. Change this to covered call. There we go. The 155s right there. One contract. Just so that you know what the numbers look like, here it is. ExxonMobil. By one covered call, ExxonMobil, 15 May, not this Friday, next Friday. The 155 call option, 432 is the profit, 15,000 is the investment. Well, let's take a look at that rate of return. Sounds good. Clear that. 432, and divide that by $15,068. Try that one more time. $15,068 gives me a grand total of 2.8%. Now this is a 2-week trade because there's only 3 days left of the week. So next Friday, 2.8%. I'm going to save this one, 2.8. That means we had to come up with 2 more. Come on, we find 5 every night. We got 3. We need 2 more. 5 a night, every night. Google, hell no. Google only has 2 years of dividends. That's it, just 2 years. 2. I want 2 decades. That's 10, 20 years. Hell no to Google. Sorry. All right, here we go. ExxonMobil. There we have it right now. ExxonMobil by one covered call. 15 May 26th. That's next Friday. The 155 call option, profits 432, the investment's 15,000 for a 2.8% for 1.5 weeks. So I'm going to say yeah to this one, 2.8. 2.8. Let's do this for a second. $1.4. That works. All right, we need 2 more. Give me 2 good ones. Come on, you guys, get something there. Video idea, say 67. Okay. Ooh, 5-star, Procter and Gamble. This company's been in business for over 100 years and 5 decades of increased profits. Why isn't Procter and Gamble on your list? Is a better question. Why not? Well, most people say it's not on my list because it doesn't grow very much. No, it doesn't. But it is consistent and predictably making profits. Procter and Gamble. Here we go. You ready? As soon as it pops up, there it is. The high, the low. Where was it? Where is it? Look at this. Up, down, up, down, up, down. Oh. What's going on right there? Let's zoom in. Wait a minute. Before I even spend any more time. Before I spend more time on the chart, 144.90, 145. If I'm buying it at 144.90, I want to find the closest strike price. So if I buy it here, sell it here, I'm going to make $2. That's almost 1.5%. For a company that's almost 130, 140 years old. All right, let's find out. All right, so now this is over 1%. Great. Now I want to take a better look at the chart. So, last 30 days, which would be the 5th right there. Here we go. Last 30 days. High, low, where was it? Where is it? Up, down, up, down. Okay, so it's still dropping. So not this week. Sorry, I love Procter & Gamble. I do. It's always on my list. But I got to wait for the bottom to show up because it's dropping. As soon as the bottom shows up and turns around, goes back up, that's where I want to jump in. As a matter of fact, I'm going to write Procter & Gamble on my list for next week. Okay, Procter & Gamble is on the list for next week. What do we got? Next. Google's to be hell no. Hartag wants to take a look at Harley Davidson. Harley Davidson, you ready? Here we go. The high, the low, where was it? Where is it? Look at it. Sideways, up, down, up. Now from 17 to 25 is $8. Think about that. From the bottom, because somebody bought it down here, jumps up $8. Okay, that is almost a 50% increase, just right there. So I'm not going to buy that. And besides, when I zoom into it, check it out. Here, shoots up. Why the hell would I buy at the high of the 90-day period? I don't buy at the high, plain and simple. Don't get me wrong, I love Harley Davidson. I actually have some, but I'm not going to enter a new position because it's at the high right now. Buy low, sell high. Thoughts on Exxon? Nick, we did Exxon like 5 minutes ago. USAR rare earth. Now, I don't think USAR has enough historical performance. I think they're a relatively new company. So why would I be investing in them and waiting for them to pop up? All right, so what else we got? Muffin basis. Not quite sure what you mean by that. 5-star BLO. Jay, anyone need help? All right. Jay, I don't appreciate that, man. Come on. I don't go to your website and do that kind of stuff, Jay. Bassmaster, I feel hopeless. What you preach seems unattainable for lower middle class. Well, here's the thing, Bassmaster. You ready? I get the same issue with my daughter when she started. I get the same issue with my grandson. He's 6 years old. And yes, there is a way for you to do it. Same thing. We're going to go back to this right here. Back to this, Bassmaster. You ready? The calendar, May 2026. I'm only looking at good quality companies that are consistently profitable. You ready? So if I know Aflac is paying its dividend on the 20th, which is 2 weeks away, right? You can put $5, $10, or $15 into Aflac. Think about this for a second. Go slowly. Okay, Bassmaster, go slowly. So my grandson's going to start out with $50. So he can pick 5 positions. So it's $10, $10, $10, $10. Now we're going to do it on Robinhood because Robinhood allows you what's called fractional shares. Because Aflac at the moment has a dividend here. Okay, so if I'm buying it, let's say I buy it tomorrow, okay, and the stock goes up 1% or less, or 1%, 2%. The number I came up with is 1.25%. That's a consistent number. The stocks have a tendency to move predictably, consistently, 1.25. So if I buy Aflac, put 20 bucks into it, I'm not going to make a lot, but 1% every week or 1% every 2 weeks is still a nice rate of return. And then you just compound it over and over and over again. So I don't know how old you are. I don't know how much money you want to start with. I have no idea what your goals are, but I'm going to tell all of you, okay? Anywhere between 5,000 and 50,000 people come through these 13 different channels. If you want to have a conversation, DM me your phone number or go to the website and just book a call. I love talking to people. I like helping people out. I'm at that point in my life where money has a different meaning to me. Okay? You'll get there too someday. When I was younger, yeah, I was money hungry. Well, now that I'm in my 60s and I'm retired, well, I got 5 decades of work behind me. 5 decades. So I have enough to live comfortably. But here's the thing. Money doesn't have the same value to me now as it did before. I would prefer to hang out with my kids, and I would prefer to hang out with my grandchildren. So I feel compelled to give this information. Now, I only give away one free strategy. That's it, just one. Now, I'm not trying to sell you anything, but I've written books, I get seminars, I get the courses, all that stuff, and we do have a paid trading group and our own Discord. If it's interesting enough, keep showing up. We're calling it the what the hell was that? We're calling it the Maverick strategy because that's my grandson's name. So for a 6-year-old, he's going to start out with 50 bucks. And me, the wife, and the in-laws, and my kids, my son and my daughter-in-law, we're just going to take our spare change. Because at 6 years old, what are we going to come up with? 5, 6, 7 bucks in spare change between the 6 of us? Okay, but 5, 6, 7 bucks between the 6 of us. He's 6 now. When he's 18, that's 12 years. 1% a week for wait a second. Hold on. I don't know how well this is going to work, only because I'm having an internet problem at the moment. But Bassmaster, you ready? Okay. We're going to go to the 10MinuteTrader, which is my website. You can just book a call there. Oh, come on. Internet problem. All right, we're going to have to do it tomorrow. What I have is what's called a compound interest calculator. It allows you to see what 1% a week would look like. Now, I have no idea how old you are. In your 20s, your 30s, your 40s, your 50s, your 60s. I don't know. Okay, but I put in 5 decades. Okay, we're not going to do that one because we're having issues. Sorry. I'll have to fix that for tomorrow. Show up again tomorrow. I got something cool for you. Muffin, oh boy, no. At least sell 0.15 or 0.25 delta. Okay, Muffin, I'm kind of curious because I know that my daughter, 9 years old, was not a Mensa student. She wasn't an honor roll student. She was just an average, everyday girl. Trying to explain delta, vega, theta, and all that other crap, I might as well just go to the Fibonacci and the retracement on the RSI, all that other bullshit. It was created for a 9-year-old. It is nothing more than adults trying to make it more complicated. Delta has nothing to do with what we're looking at. Nothing at all. Absolutely 100% nothing to do with what we're doing. Okay? Stocks do 2 things. They go up, they go down. They go up, they go down, they go up, they go down. That's it. When the stock is going up, great. I'll buy it if it's not, if it's less than a 10% move. Okay? As the stock's going down, I don't want to own it. Is it going up? Is it going down? What am I buying it for? Well, if I'm buying it for 27, if I buy it for 27, and I sell it for 27, I'm bringing in $2. Is that more than 1%? It's got nothing to do with the delta, got nothing to do with the vega, it's got nothing to do with the theta, nothing to do with any of the Greeks. It either makes sense or it doesn't. Lexi, what's happening, Lexi? M Bean, what's happening, M Bean? View request. Okay, Lexi, I don't know who you are. I don't invite people on that I have no idea who they are, because I don't want to talk about Amway. I don't want to talk politics. I don't want to talk religion. Okay, just dividend investing stuff. You want to have a conversation? This goes for all of you. You want to have a conversation? Great. DM me your number or go to the website and book a call. Now, I'm also going to warn you that you're on here. There are people on these websites trolling, looking for you. Basically, if you get a text, if you get a DM, if you get a WhatsApp, if you get a Telegram from me, it ain't me. I don't do that. Okay, so if you think you're having a conversation with me and it's not on the phone, you ain't talking to me. Okay, the last I checked, there was 37 people pretending to be me. And some people have been scammed out of money. It's not me. You want to have a conversation? Give me your number. I will call you personally. Personally. I won't pass you off to someone else. I will call you personally. Want to have a conversation? DM me your number or go to the website and book a call. That's simple. I love talking to people. I do. I like helping people out. All right. So, Bassmaster, if that makes sense, great. If you're starting and you don't have a lot of money, and some people don't, $5, $3, $2, it's the consistency that matters more. Consistency and time. Okay, I'm 62. What do I get? 20, 30 years left? If I'm lucky. Okay, if you're in your 20s, your 30s, yeah, start small. $1, $2, $5. But the consistency is more important. The strategy I'm creating for my grandson, he's 6. It's going to be so simple, and it's going to be on Robinhood, because Robinhood is the easiest trading platform I've seen so far. And I want it to be simple because he's only 6. And no, he's not a Mensa student either. Just an average little kid. All right. So Muffin, I appreciate what you're saying. And yeah, Delta does make sense for a more complicated strategies and for the more educated or the more seasoned investor. But simplification, you don't need the Delta. The stock's either going up or it's going down. It's not doing anything else. What do we got? Thank you, Muffin. Thank you for that. Bassmaster, you preach re-strategy. No, I don't. Okay, I just told you. My daughter started out with not a large amount of money. Sounds good for someone who has money. Not necessary. All right, we already had this conversation. What I'm saying is trading strategy, you can do it for $5 a week. And it depends on how much time you have left. Okay, if you're in your 20s and 30s, well, your retirement is 20, 30, 40 years away. Okay, so I'm 62, which means 5 decades. My very first job was in 1974, Old Man Simmons Farm. My very first job, I was 10 years old. Yeah, the 70s were a little bit different. Seriously, it was. I was walking my ass to school when I was 8. Yep, 2nd and 3rd grade. I was walking myself to school, and it was 3.5 miles. 3.5 miles. No, it wasn't uphill both ways, okay? It was downhill, it was uphill, it was downhill, it was uphill. Okay, but still, it was a different world back then. At 10 years old, I had my first job. I put in 5 decades. I have enough, but I put my time in. Now, you can start with $5 to $10. It's the consistency that's more important. Okay, whether you have $20, $30, whatever you want to start out with, you need a consistent amount to put in every single week. $5, $10, anything. Come back tomorrow. I'll get the new web. I'll try to figure out what's going on, why this internet's so slow, and we'll have a better. I'll better show you the strategy. All right, you are ignoring my questions. Okay, so comments, Bassmaster. I am not ignoring you. What I tried to tell you earlier is that I am live streaming on 13 different platforms, which means there's 8 different cameras in front of me, which means there are 6 cameras that actually have comments. 1, 2, 3, 4, 5, 6, and then down here, I have no idea to answer these questions down here. I'm not ignoring your questions. It takes time to get to each and every one of them. Okay? I'm calling you out. Yeah, I got you. Why VOO no good? Oh, David, I already said why a VOO is no good. For me, anyway. I'm not telling you no. Okay, so let's go back to, here you go, right here. David, are you ready? All right, never mind. Okay, David, you ready? Vanguard, S&P 500 ETF, VOO. All right, slide down just a tiny bit. David, right there, yield. The yield is your rate of return. The yield for VOO, this deserves one of these. You ready? The yield for VOO, 1.19% for the year. David, the year, 12 months, 52 weeks, 365 days, you're getting 1.19%. How can you possibly say that's a good thing? Seriously, VOO is paying 1.19%. 1.1. It's not even 2, it's 1.19. That's why I'm saying it's no good. I'm showing you how to get 1% every single week. And if your math is okay, 1% a week is over 50% per year. Why are you putting your money into something that pays you 1.19? That's the only question I'm asking. You can do whatever you want. You think that's good? Good for you. Seriously, good for you. If you think that's good, good for you. I don't have that kind of money. I only average about 1.4% a week. 1.4. I've been doing this for 30 years, so it's a different story. Muffin! David, he says, because dividends yields low, but doesn't mention the weekly options on it. Well, Muffin, I can't name dividends on in the weekly options on every single stock. It just doesn't work that way. There's just too many. Okay, there's 11,040 different companies, which means it's 3,500 different dividend stocks. Okay, take a look. There's about 15 there, 6 there, 12 here, 31 here, about 22 there, 39 here, 14, 15, another 12, 56 there, 47 here, another 18, another 20, another 32, 102, about 20, about 18, about 15, about 18, about 12, about 20, 37. All these dots are companies that pay dividends. Now, they don't all increase, but that's all of them. Look at how many there are. There's 47 on the 11th, which is next Monday. There was 39 yesterday. 39 yesterday. How much today? 4, 6, 9, 13, 14, 18. 18 companies had a dividend, was the EX date today. There's no possible way I can show you each and every one of them. Let's keep on going. All right, video. Okay, what do we have down here? All right. Hassan, weekly chart for options. Yeah, we got that one. David, I have been hearing a lot of talk about JEPQ. What are my thoughts? You're not going to like it. JEPQ is worse than VOO. Well, let's take a look. Okay, JEPQ. JEPQ. It's another one of those stocks that they ram down your throat. Literally, rip your mouth open and ram it down your throat and saying it's good. VOO is 1.19% for the year, and you think that's good? Well, let's take a look at JEPQ. Sit tight, we'll get to it. DBAS. If Nike goes to 40, I'm going all in. All right. Don't know why, but all right. Hayes, Univision, Scott, what's going on? KK Supreme. I'm definitely having issues with the internet. Uh-oh. What the hell was that? Uh-oh, that one that one died. Not good. All right, let's get out of there. Get out of there. Go over to here. All right, that'll do. Oh, come on. I got a new modem and a new router 5 feet away. Why is it taking so damn long? So apparently we can't take a look at Vanguard. Put it down here. Let's get out of here. I don't want to see that. That's earnings. Go back to here. Go back to here. There we go. All right, next. Gilreath wants to take a look at Apple. Okay. I like Apple. AAPL. Apple is one of those stocks that, consistently increases year after year after year. Okay, great. We're going to get to that in a second. Road Warrior EX dividend, absolutely. John, sell high, absolutely. Univision, how do you know that it will increase? Stocks do Univision, okay? Stocks do two things and only two things, okay? They go up and they go down. You ready? Look, they go up, they go down. They go up, they go down, up, down, up, down, up, down. That's all they do. It's either going up or it's going down. It's one or the other. There is no sideways. There is no, hey, wait a second, I'm going to go to your house, make you dinner. It doesn't work that way. They go up, they go down. That's it. How do you know they'll increase? You don't know. Here's an idea. Okay, Univision, think of it this way. Okay, Home Depot, Lowe's, Wells Fargo, Procter & Gamble, Dividend Kings. For 5 decades, that's 10, 20, 30, 40, 50 years. For 5 decades, these companies, Dividend Kings, have increased their profits to their shareholders for 5 consistent decades. That's year after year after year after year, increasing their profits. How do I know they'll do it again? I don't. But if they've done it 5 decades, they'll probably do it again. Because if they don't do it again, they get kicked off that list. And it takes a long time to get on that list, 5 decades to become a dividend king. Becky, how you doing? All right, so this one's just opening back up again. All right. Dismissed. Not now. Not now. Not now. All right. Give me a second. I got to turn this one on again. It turned off on me. All right. So Nike. All right. We're going to take a look at Nike in a second because I'm a little disturbed when people say that. Nike hits 40, I'm going all in. What does it mean by all in? Put all your money into one stock? Why the hell would you do that?
48 hours ago, Friedrich Merz was the most confident man in Europe. Today, he is watching his...
Come on. Hold on. Ken Ray, how you doing? Hayes, have you ever sold out of the money for a cup of coffee? All the time. All the time. You got to realize, Hayes, I do over 1,000 trades a week. Yeah, over 1,000 trades a week. I got 7 different accounts, and I have to keep track of all of them. Okay, I do a lot of trading. All right, Apple, same thing as all the other stocks we looked at earlier. You ready? Hold on, I'm going to fix this. Not that one, this one. There we go, there we go, and there we go. Okay. Same thing as all the other companies I'm looking at. The high, the low, where was it, where is it? Look at the motion. Up, down, up, down, up. I don't buy at the high. It doesn't make any sense. So no to Apple for this week. Yeah, the last 30 days. 245, now we're at 284. No, I don't buy at the high. Next, but as soon as she drops back down, because she went from 245 to 285, that's $40. Okay, that's close to 24.40, about 18%. Now she's come back down. Eventually, okay, I won't look at Apple again for about 2 weeks, and I'm going to put Apple down in my book 2 weeks from today. Not 1 week, 2 weeks. All right, Apple on my was 2 weeks. EX dividend, right? Absolutely, Road Warrior. Thank you for that. How do you know it's going to increase? Because if a company has done the same thing for 5 decades in a row, more than likely they'll do it again. Not guaranteed. There's only 4 guarantees in life. I thought there was 3, but nope. I found the 4th one. 4 guarantees in life. All right, Dima, what's going on, Dima? Thank you for stopping by. Muffin. It takes time, OFC, of course, but also a commitment. You could make serious money with it. Yeah, you can. Okay, so I work with a lot of people, and there was one guy last week. It's like, holy cow, he made more money in one day than most people make in a year. Well, he's in a different position than we are. Okay, everybody's on their own personal journey. You're on your own personal journey. You don't have the same amount of money as I do. You don't have the same amount of money as Backyard does, or Mark, or Albert. We all have a different amount of money to play with. We all have a different risk factor that we're willing to deal with. We all have different dreams. We all have different visions. We all have something different to offer. You are different than everyone else. Your journey is your journey. Whether it makes sense or not to you, that's your decision. It either makes sense or it doesn't. You either like the company or you don't. You either invest yourself or you don't. Because there's some things you only have 2 choices on. Choice number 1, do it yourself. You don't do it yourself, guess what? Someone else is going to do it for you. If you have an IRA, if you have a 401k and it's not self-directed and you're not in charge of it, someone else is doing it for you. That's it. You got 2 choices. That's it. That's your choice. Do it yourself or give it to someone else. That's it. What if it goes down? Univision, I hate to be the bearer of bad news. Really, seriously, I do. I get this question every single day. Sometimes 3, 4, 5 times a day. You ready? What if it goes down? You mean kind of like that? Kind of like that? They all go down. You are 100% guaranteed when you buy something, it's going to go down. Also, you're 100% guaranteed whenever you buy something, it's going to go up. Because that's what they do. They go up, they go down, up, down, up, down. There's no other way around it. And if you think just because you bought something, it's not going to go down, no, you're deluding yourself. It's a game, kind of like Monopoly. 4 greenhouses, 1 red hotel. Round and round, round you go. You pick up on $200. Watch out for the what do you call it? Go to jail. That's all it is. It's a game. You have to learn the rules. Well, here, my 9-year-old, 9-year-old. Now I have parameters set on each one of these channels. So I'm live streaming on 13 different channels. Every single one says you got to be at least 18 to enter. So my assumption is everybody here is 18. The strategy I'm giving to you for free, no strings attached, was created for a 9-year-old little girl. Simple, safe, predictable, consistent, no way for her to lose. 5 simple rules. Rule number 1, never buy anything not on your list. What about gold? Hell no. Mark, when is the last time somebody came, knocked on your door? Hey, Mark, I see that you have 4 or 5 ounces of gold. Here's your weekly allotment. It doesn't work that way. Gold is nothing but a dust collector. Now, granted, it goes up when the economy goes to shit. But remember back in the 80s, gold went from $250 an ounce to $800 an ounce. Then when it hit 800 and whatever it was, it took 3. You ready? 3 decades. 3 decades is 10, 20, 30 years for the people who bought in the 80s, the early 80s. 3 decades to break even. Not to make money, to break even. But don't get me wrong, gold has its place. Weekly cash flow is not it. What was I saying? Must not have been important. Okay, so yeah, Univision. Stocks go up, stocks go down. That's it. That's all they do. They don't come to your house, make you dinner. They don't take the dog for a walk. They don't sweep the driveway. They don't rake the lawn. They don't trim the trees. They don't take out the trash. They go up, they go down. That's it. Up, down, 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 up, down. That's all they do. They go up, they go down. That's it. It is your job to jump in at the right time. It's like a merry-go-round. It goes in circles and the horses go up and down, round and round, up and down. That's all they do. You're trying to make it more complicated to satisfy your ego. It was created for a 9-year-old. And simplicity is very challenging because it is so simple and easy. You have to say, wait a second, it's that easy. It's either going up or it's going down. That's it. Is that calendar part of Think or Swim? Yes, Chris, it is. Muffin, I don't know why he does at the money. It's better to stick to the delta range. Help. Muffin, I've been doing this for 30 years. Okay, trying to explain delta to people who don't understand what the hell the Greeks are is a pointless endeavor. To a 9-year-old, it had to be under 10 minutes. Now, I could sit here and get really complex on you if you really want me to, but that's not my intention. My intention is to make this as simple and easy as possible. Because we can get into the RSI index, we can get into Fibonacci retracements, we can get into a lot of shit. Seriously, we could. But I want it to be simple, safe, predictable, and consistent, less than 10 minutes a day. It's going to take hours to explain to people about the delta range. Because you don't just have the delta range, you also have the vega, you also have the theta, and you also have the rho. All that intertwines together to give you wait. Black-Scholes pricing methodology of standardized options. I got it here somewhere. Hold on. There it is right there. All right, let's move it someplace where we can see it better. Right here. Look at this. We get this really good. You ready? Here we go. There you go. That is the equation for how the increase of a stock is directly related to the increase of the option. Do you see all this shit? That tells you, that is the Black-Scholes pricing methodology for standardized options. All this shit, time value, interest rates, implied volatility, time to expiration, stock price. So much goes into the valuation of the stock options. Theta, where's theta? Theta. No, that ain't it. It's in there somewhere. I think this one, right? Whoops. Yep, theta decay. Whoops, that's not even either. You're trying to make it more complicated to satisfy your ego. Delta has nothing to do with what I'm doing. The stock is, come on. The stock is either going up or it's going down. A 5-year-old can say, hey, here's the high right there. Hey, here's the bottom right there. Hey, it went up, it went down, it went up, it went down. Now it's up again. Now it's right here. I can get a 5-year-old to point that out. Why are you trying to make it more complicated than it needs to be? Is the calendar part of Think or Swim? Yes, it is. Hickory Dickory, how you doing today? What if it goes down? Well, we already talked about that one. Univision, what if it goes down? It all goes down. PLTR, hell no. PLTY, no. It doesn't have 20 years of increased profits. Explain 1-year chart. Oh, okay. Well, let's explain the 1-year chart. I don't know why you want me to explain it. Okay. Today's date, right there. 1 year ago, 52 weeks ago, 365 days ago, right there. Okay. A year ago, today. The high of the year, the low of the year. Okay. She went sideways. She went up. She came back. Up, down, up. What more explanation do you want? Go and no go. Well, I don't buy at the high. Absolutely no. If it looked like this, I would be looking for the bottom for it to turn around. So what's going to happen next? Okay. Hits the bottom. Slowly goes up, come back down, up, down. That's all stocks do. They go up and down, up and down, up and down. That's it. What if it goes down? They always go down. How do you predict prices? Okay, I have no idea why you're talking about predicting prices. None whatsoever. Followed the bouncing ball. Up, down, up, down. See? Down, up, down, up, down, up. That's it. Follow the bouncing ball. Down, up, down, up, down, up. Where's it going now? It's going up. It's actually that easy. TXRH, never heard of it. Hey, Shaprolative, what's happening, brother? Haven't seen you in a while. Well, I was gone for 2 weeks. That's probably why. TXRH, never heard of it. TX Roadhouse, Texas Roadhouse. No, I think Texas Roadhouse is a monthly. Steez, what's going on, Steez? User, okay. Loss, red. Okay. Muffin, TR, run the options yourself. Most profitable but more expensive PLTY will keep dropping as it pays. Yeah, okay, that works sometimes. Kate, good evening. Mary Kid, Hickory. Okay, user 87820114. Okay, I'll call you Stacy, right? Hope you don't mind, Stacy. Red, down? Well, no. Okay, Stacy, let me correct you here for a second. Okay? Green is usually an up day. Red is usually a down day. When a stock goes down, let's say hypothetically I buy it here at 192. Now it's down to 174. 192 to 174 is, oh, shit. 10, 20, I don't know, about 16, 17 bucks. Okay, drop. Did I lose any money? Stacy, did I lose any money? No. Just because a stock goes from 192 to 174, I didn't lose anything. You never ever lose until you agree consciously to sell it for less than what you paid for it. So if I paid 192, no way on God's green earth am I ever going to sell it for less than 192. Simple. I buy it for 192. I will only sell it above 192. That's it. But if they consistently increase their profits, which means I get higher dividends every year, I'm good with that. Also, I have the ability to sell at the money, out of the money, or in the money options and bring in money every single week while I'm waiting for it to bounce and go back up. Because that's all stocks do. They go up, they go down, they go up, they go down. Okay? Down, up, down. That's all they do. Never sell. That's rule number 2. Never sell at a loss. Univision, how do you know how much you will sell it for? Wow. Okay. All right. Right now, the stock is at 158.03. Okay. 30 days ago, we're at 169. Now we're at 158. Okay. Univision. If I buy it at 158, 158, 158, 158, that's the current price. If I buy it at 158, I'm going to sell it 157.50 because 135, 140, 145, 150, 152, 50, 155, 157.50, 160, 162.50. These are the strike prices. These are my choices. The closest one to 158 is going to be 157.50. And that, my friend, is going to pay me $5 per contract or $5 per share. So let's see this one. Okay, down. Now she's bouncing up. Let's take a look. Okay, let's get rid of this. Okay, let's change to covered call. And we're currently at 158. The closest one's going to be the 157, which is less than what I'm paying for it. Right there. Okay, right over here, I want just one contract so you get a better understanding of the numbers. All right. This is what the order should look like and should sound like. Are you ready? Buy one covered call, Texas Roadhouse, 15 May, which is next Friday. So I have a week and a half. So I want at least 1.5% because it's a week and a half. The 157.50. Well, it's 492 profit and it's a $15,000 investment. That being said, calculator, always going to need handy calculator. We take the profit, 492 per contract. 492 per contract. We divide it by the investment. Cost of the trade, including commissions and fees. Right there. Okay? 15,258. 15,258 comes to a grand total of 3.2%. Okay, 3.2% for a week and a half. See that? Week and a half. 3.2%. Let's save that one. This is number 4. We need to come up with one more. Uh-oh. I don't want that one. I gotta do that one more time. There it is. Saved it on the wrong page. Gotta go onto the right page. Here we go. And there we go. And there we go. All right, this is number 4 for the night. We need one more. Come on. Where are you? There we go. Texas Roadhouse. All right. By 1, covered call, TXRH, Texas Roadhouse, 15 May 26. That means the option is going to expire next Friday. So I have a week and a half. The 157.50s, I'm going to walk away with 492. It's going to cost me $15,000 for a 3.2% for a week and a half. 3.2. 3.2. VOO is paying 1.19 for the year. This is paying 3.2 for the week. We need one more. 3.2. One more. What do we got? What do we got? John, how you doing? Ooh, golf time. Let's take a look at Mark. MRK. Whoa. Gotta get rid of this. Get rid of that. Change this to that. Go there. Merck is MRK. High, low, where was it? Where is it? Sideways, up, down, up. That looks pretty good. Let's zoom into that. Last 30 days. Right here. Here's your last 30 days. 30. This is what I'm looking for. Number 1, it's a good company. Merck. Do you like Merck or do you not like Merck? Okay. The high, 124. The low, 108. 30 days ago, we're at 120. Now we're at 113. Up, down, up. We get all that room to go. The high is way up here. The low is way down here. But we are here. Plenty of room to run. So, the 113s are going for 221. That's more than 1%. Let's do this one. This will be number 5. Mark, number 5. Covered call. The 114s. Let's do the 114s. The reason why we're doing the 114s is after market hours, it's 113.88. That's close to 114. All right, so 114. Okay, the 114 right there. Okay, one contract. Here's what it should look like and what it should sound like. Are you ready? By 1, covered call, Merck, MRK, 15 May 26. That's for next Friday. The 114 call options, the current price, 113.88. Why not automate this process? Because I don't trust computers. Sorry. I like to have some control of my own life. That's it. That's the only answer I can give you. I want some control of my life. Master Wombat. I'll give you a perfect example. Okay? Last week I was in LA. And the taxis, the Waymos, no driver. Ain't no way in hell I'm getting into a taxi with no driver. Sorry. I don't care if it's the way of the future. I wanted Uber with somebody in it. Okay? All right, so here we go. One covered call, MRK, 15 May, 114, 280, 11,000. Let's take a look at the numbers. This could be the last one of the day, and if so, that's it for the night. 5. That's your 5. All right, 280 is the profit. The investment for this one, cost of the trade, including commissions and fees. Now, remember earlier when I said simple, safe, predictable? Remember the predictable part? Yeah, Alan, I hear that. Predictable. I know exactly what my profit's going to be. I know exactly what it's going to cost me. And here's the issue when people buy stocks. When you buy a stock, you have to wait and wait and wait and wait for it to move. You don't know when. So this strategy here, I don't have to wait at all. My profit is already built in. 280, 11,000. What is that? 280 divided by 11,000. 11,120 comes to a grand total of 2.5 for 1.5 weeks. 2.5. Yeah, I'm going to save that one. I like that. 2.5. That's it. That's number 5. Number 5 for the evening. Every night, I do it, not every night, Sunday, Monday, Tuesday, Wednesday, Thursday. I give you 5. We take a look, see what it looks like. Cam, have a good night. Nice to have you back. Thank you very much. All right, here we go. Mark, MRK. All righty, here we go. One covered call, MRK, 15 May 26. That's next Friday. Not this Friday, next Friday. SS Clam, what's going on? All right. The 114 call options, 280 is the profit, 11,120 is the investment. Think of it as creating a weekly cash flowing asset. Every single week, I want 1%. Spend a buck. What time do you come online nightly? Nightly, 9 p.m. Eastern Standard Time. Now, I just flew in from Vegas this morning. Actually landed this morning around 7 o'clock this morning. So, yeah. All right. What did I say this one was? 2.5%. $2.5%. There we go. 1, 2, 3, 4, 5. 5, 5. Let's sing a song of 5. How many is 5? Some of you don't even have any clue where that came from. That came from Sesame Street. All right. Crestwood. Reddit does not have 20 years of increased profits. CLMT, never heard of it. STRC, sorry, Mike, never heard of that either. Okay, I like companies that have consistently been profitable year after year after year after year. I haven't heard of any one of those. Sorry. John, Road Warrior, Verizon. We'll take a look at Verizon tomorrow because we already found the 5 for today. Okay, it's only 5 a day. And it's past 11 o'clock. Might go down. No, it won't might go down. Hold on a second. There is no might about it. See, it's a little strange how some people have the impression that stocks might go down. No, they are going to go down. It's like 100% guarantee that it's going to go down. It just all depends on where do you enter. If you're going to enter here, yeah, it's going to go down. If you're going to enter here, well, it's going to go up, then it's going to go down. Stocks do 2 things and only 2 things. They go up, down, up, down, up, down, up, down, up, down, up, down, up, down. That's it. That's it. They don't do anything else. All right. Ashoff. Oh, okay. I don't like it when people come here and troll. It's just not a good thing. Not a good thing when you troll on other people's accounts. You know what I mean? Do your own work. Okay? Now, as I was saying earlier, if you're here, you are going to be approached by someone claiming to be me. Sorry, I don't do it. I don't text. I don't Instagram. I don't WhatsApp. I don't Telegram. I don't do any of that stuff. If you want to have a conversation, go to the website book a call. You don't want to do that? Fine. Drop your phone number here, DM me, and I will give you a buzz. It's actually that simple. Okay, but don't do that. Don't come here and stuff. Yeah, just beware that people are doing that. Newberg, thank you. Emmanuel, thoughts on Intel? Let's do it tomorrow because it's past 11. Already been here. We already found out 5 for the night. Can I recap? Absolutely. You ready? Here we go. What we're doing here is investing in pre-qualified dividend stocks. A pre-qualified dividend stock is any company that has a consistently profitable for at least 2 decades. Jump in just before the EX date. Do a covered call. It's simple. It's safe. It's predictable. It's easy. Jump out after you get your 1%. That's it. What else do we have? All right, I'm going to jump down here to YouTube and get some questions from you guys on YouTube. All right. Elber Gomez. Hello. I mean, the 5 picks. Yeah. Give me a second. Thank you there, Elber. Market closes for Cinco de Mayo. Could be. I have the same problem. Retired a year ago. Wingnut, you and I should chat. Seriously. Drop me your number. I'll give you a buzz and we can chat. Okay? I entered one covered called the Gap. Oh, let's pull that up for a second. You're in the same predicament I am. The Gap, GAP. Now, unfortunately, you didn't tell me when, and you didn't tell me what your outcome was. Well, let's pick it up. You got one covered call on the Gap, the 24.50. The bid was 68. The stock is kind of dropping. Perhaps this can serve for another example. Well, my question would be, when did you jump in? So let's take a look at the stock. Now, don't get me wrong. I like the Gap. I do trade it every once in a while. Hey, 86. Dude, 86. Yo. Do you see what time it is, dude? It's just getting done. But thanks for showing up. Hey, Paul, how's it going? Yeah, me and Paul met up in California. Him and his wife are now retired because they make enough that they don't have to work anymore. Okay, so anyway, Curtis, see, I don't know where you jumped in. Let's take a look at the numbers. Are you ready? The high is here, 29. She dropped down to 19, back up, back down, back up, back down, back up, back down. Okay, so where did you jump in? That's a very important question. Okay, you said you did the 24.50s. Well, 24.50s right here, so you either jump in here, here, or here. Now, it looks like you would have done it here. Let's zoom into that. Last 30 days. Here you go, last 30 days. Okay, here's the high, the low. Where was it? Where is it? Okay, up, down, up, down, up, down. Okay, hypothetically speaking, it looks like you jumped in right around here because she went up, she came down, 2 days up. Now, I see what you're saying because it looks like, let's back this up a little bit. Okay, so a couple of days ago, this is what you saw, and it kind of made sense. The high, the low, where was it? Where is it? Look at this. Up, down, now she's going back up again. That kind of makes sense. Okay, fine. Paul, Mama, Diane, how's it going? Okay. So right there, it looks good. What do your proxy margins look like? Loganius, thoughts on EPD? Okay, what do your profit margins look like? My profit margins. Now, I'm not quite sure what you mean by my profit margins. Okay, now my goal is very simple, 1% every single week. So if I have $100,000, my goal is $1,000 a week. 300,000, it would be $3,000. That's my goal. My profit margins. Okay, you're talking profit margins on a weekly basis, monthly basis, annual basis, quarterly basis. Okay, so I have a very simple strategy. Buy just before the EX date. Stocks go up, jump out, grab 1% every single week. That's over 50% by the end of the year. Compounded, it's 64%. Hopefully that made sense. Okay, so back to you, Dev. Okay, it looks like a good place to jump in. She drops down. It looks logical. Okay, now me personally, recap the 5 weekly. Hold on, Tyke. I'll get there. Me personally, and you can check my videos, I say the same thing all the time. I look for the 30-day top bouncing off of the 30-day bottom. See, 30-day bottom, 30-day top drops. Here's the time to jump in. 2 days to the upside. On the third day, I'll jump in. Okay, here's your bottom. Here, Friday. Friday was the bottom. Okay, zoom in really close. See, right there. Friday's bottom. Thursday looks like the bottom, but Thursday, okay, this price right here, we're the low right here, 24.18. Okay, Thursday right there, 24.18. Friday right here, very next day, the bottom was 24.17. So the bottom was Friday. Means you only had 1 day to the upside, and that was today. Normally, I buy 3 days. 2 days to the upside, which today, tomorrow, and Wednesday. Well, I meant take tomorrow, Friday. Okay, but still, let's get back to where you were. Okay, so you jumped in at 24.50. All right. What's the 24.50 doing? Well, the 24.50 is here, and it's going for 39 cents. 39 cents is still over 1%. That's exactly what I'm looking for, 1%. I can tell you know yourself. Thank you there, Loganis. Brandon, average annual return, over 50% on average, 1% a week. On average is over 50% by the end of the year. Okay? So the 24.50 is 39. Now here's the thing. I have certain rules. Rule number 2, never sell at a loss. So if you bought it at 24.50 and it's dropping, well, great. What does next week's 24.50s look like? Okay. Next week's 24.50s, let's get out of there. Okay. Every week, the 24.50 is going to be available to you. Never, now I can't tell you what to do, but if it was me, I would never, ever, 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 I could keep going, but never, ever sell it for less than I paid for it. It defeats the purpose. So you jump on the third day if it goes up. What if the third day is not a Monday? Well, you weren't listening to what I was saying. If I'm looking at a stock, now on the third day, I jump in. Sometimes I buy on a Tuesday, sometimes I buy on a Wednesday, but 98% of the time, it's usually a Monday or Tuesday. That's it. Do you need investors? DM me. We'll chat. Seriously. Yeah, I see that. But DM me your number. We'll chat. Okay? All right, so anyway. Thank you, Leganius. So, Curtis, I hope that makes sense. Because number one, the gap, you either like the company or you don't. They're very simple rules. One, never buy something you don't want to own. 2, never sell at a loss. It defeats the purpose. If you paid attention to rule number 1, rule number 2 should never be an issue. Now, as the stock drops, the premium is going to get lower and lower and lower. But here's the thing. If Gap continues to increase its dividends, which is what we're looking for, but the byproduct is collecting this premium every week. So look, at the money, it's $1.02, which is over 4% at the money. One strike out of the money is 75, which is 3%. That's one strike out of the money. 4 strikes, sorry, that's 1, that's 2. 3 strikes out of the money is 54. That's 2%. You can keep pushing it, pushing it, and pushing it. Because 4 strikes out of the money is 1, wait a minute, 1, 2, 3, 4, 5. 5 strikes out of the money is 29. Still 1%, but it's 5 strikes out of the money. So it doesn't really matter what you bought it for and what's it doing. It's just, what do the number? I asked myself 5 questions. What did I buy? What did I sell? Where is it right now? Where is it going? What should I do? Those 5 questions are relatively easy because when you buy your stock, 24.50, whatever you bought it for, what did you sell? The 24.50. Okay. Where's it at now? Okay, it's right here. Where is it going? It's going up. Great. What should you do? They're simple questions. What did I buy? What did I sell? Where is it? Where's it going? What should I do? All right. Let's go over some more questions. What else we got? Sean, how's it going, Sean? Sean Sweeney. Kissable. Dude, what's happening? Jack Massey. Out of those 350 companies, but how many have weekly options? That's a good question. I couldn't give you that number off the top of my head, but you could go to the CBOE. Mandy, I would like to learn. Mandy, I'm here every night. Sunday, Monday, Tuesday, Wednesday, Thursday, 9 p.m. Eastern Standard Time. I broadcast on 13 different channels, so you're bound to find me somewhere. But you're probably on the best one right now, TikTok, because everything looks normal and we can communicate easier. TikTok is the easiest one for communicating. All right, Jack. Tone River, thank you. Born to do it. He is red green dots. He is red green dots. I have no idea what that means. SN, what do you think of Owl? We'll have to take a look at tomorrow. Jason, I bought Tractor Supply at $44.79. At what point should I consider dollar cost averaging, or is there a general rule? Either way, I'm never selling at a loss. Well, number one, I like you already, never selling at a loss. Tractor Supply is a decent company. I've actually done it too. Someone has chatting with me, but I know it's not you. Absolutely, Mandy. If you want a conversation, Mandy, seriously, drop me your number. You're here on TikTok. Drop your number right here, not on the screen. DM me up the top left-hand corner. Okay, click on that. Just DM me, and I'll give you a buzz myself. Yo, Daddy, I see you. All right, so as I was saying, you know what you bought it at, $44.79. Great. Well, what did the 44.50s look like? What are the 44s? What are the 45s? What are the 46s? What are the 43s? Knowing what you're going to sell next, and don't forget, you always have the ability to roll forward. Now, rolling forward, I didn't know existed until 2 years ago, and I was like, "Holy shit!" It literally was a game changer for me because I didn't know you could do that. So once someone showed me, "Hey, you can roll forward and never lose," great. Thank you, Mandy. That's very nice. Very sweet of you, Mandy. Thank you. So always the 5 questions: what I buy, what I sell, where is it, where's it going, what should I do? You already got that one rule right: never sell loss, because Tractor Supply keeps increasing the profits. Well, good. Why would you buy a company that's not increasing the profits? To me, it sounds that you have to have somewhere on 75,000. Nope, not necessarily so. My grandson is doing this starting with $50. Okay, I have all my children and their spouses starting. Oh, we have a new strategy going out. It's called the Maverick strategy, specifically designed for my 6-year-old grandson. I'm going to say it again, and I'm going to say it slower because some of you think that you need a lot of money. You don't. I'm putting it together. It's specifically for my 6-year-old grandson. He's 6 years old. I'm going to create a strategy specifically for him. And I'm going to give it away also. Hold on, look at this. Have you worked for any banks or investment firms or entirely independent? Entirely independent. I was a CEO of a corporation a few years ago. I made so much money, I didn't know what to do with it all. So I tried all different kinds of investing. If you name it, I probably tried investing it. Okay. But here's the thing. Stocks are the simplest and easiest to enter and exit. And you can do it on a very small amount. Okay. With $50, put in $5 a week. All right, let's say you get $50. Okay. 10 positions, $5, $5, $5, $5. Only good quality companies. Right behind you, you're going to see a calendar. You ready? The calendar right there. It's called an EX dividend calendar. They're free. You can go find it somewhere. Okay, this one's on Thinkorswim. Now, Thinkorswim doesn't allow fractional shares, so you cannot put $5 into IBM or AT&T. However, some companies do. Okay, Robinhood. will allow you to put $5, $6, 50 cents, 80 cents, $102 into any company you want. Let's say you like NVIDIA. Well, you can put $5 into NVIDIA. As the stock goes up, so does your profits. And once your profit hits a certain point, mine's usually always 1.25, 1.25%. It's not a lot. It's the consistency. And you put in certain amount. So you say you start out with $50. Fine. Make a commitment to yourself. Put in $5 a week. Well, how much time do you have? I have no idea how old you are. Okay, for all I know, the youngest person in my group right now is 19. Good for him. But he's starting out really small and he can't do the big numbers that I'm doing. You got to remember, I'm 62. I put in 5 decades. That's 10, 20, 30, 40, 50 years. 50 years. I retired a couple of years ago after 5 decades of working. Now, I have no idea where you are in your journey because we all have a different journey. You got to figure out what is yours and what makes sense to you. Because the number one question you all should be asking yourself is, does it make sense? It either makes sense or if it doesn't. And if it doesn't make sense, you should probably rethink it and read it a little slower because it was created for a 9-year-old. My 9-year-old said to me in 2008, Daddy, what are you doing? Can you teach me? My 9-year-old daughter, the boys want nothing to do with money, but my 9-year-old daughter said, Daddy, can you teach me? So from that, thank you very much. What's that? Spend a buck, makes sense? Of course it should make sense. It was created for a 9-year-old. She was 9 years old and she averaged 5% a month. 5% a month is over 60% by the end of the year. It's a simple strategy. I have over 2,000 videos on YouTube, all saying the exact same thing. Never buy something you don't want to own. Never sell at a loss. Make sure the company's consistently profitable. Weekly options only, and make sure the numbers work. That's it. Okay? All right, so hopefully that works. What else do we have? Mile high process. No, there are a bunch there that less than $50 a share. Absolutely. Absolutely. I'm going to agree with you. Mile high. It's doable, just less significant earnings at first, but 1% of something is better. Still something. Yeah, I'm going to agree with you. 1% is 1%. I've lost my ass on commodities in the past, but would like to diversify. Now, I'm going to ask you a question, Leganis, and you may or may not like my answer depending on what you say. Have you ever heard of Commitment of Traders report? Direct question just for you, Leganis. Commitment of Traders report. You have ever heard of it? So I'm going to wait until he answers that question. So what do we have? CEF. If I do the math, though, 1%, you are making like 400 or so a week. $400 a week or 400 trades a week? I never looked into it in any meaningful way. Well, then you fucking deserve to lose, brother. The Commitment of Traders report tells you where all the money is going. In commodities, commodities are something that General Mill needs. Not that they want it, they need it. Man, you think that's funny. Because certain companies need certain products. It's like all the cereal companies need sugar. They need flour. They need wheat. They need it. They don't want it. They need it. So Commitment of Traders reports tell you where the money's going. So if there's 500,000 contracts going up and only 2,000 contracts going down, well, you put the money here. It tells you exactly where the money is. CHSN is the only play. Sorry, dude, never heard of it. Seriously, I've been trading for 30 years. If I've never heard of it, why would I take your word for it? I don't know who you are. CHSN, never heard of the company. So why do you think that's a good company? Does it have 2 decades of increased profits? If it does, I should have heard of it. I've been doing this for 30 years, and those are the only companies I do. Anyway, let me go finish over here. Allie, what's happening, Allie? Rodens. Okay, into what? Like Intel. Oh, okay. Sorry. Have you considered Walmart? I love Walmart. I actually have some Walmart right now. PLTR? Hell no. Now, unfortunately, I trust my advice. I'm sorry, brother. I am. I'm sorry. I always tell people you have two choices. Okay? Leganis, you get two choices. That's it. Do it yourself or trust your advisor. I'm sorry, brother. I am. I really am. Okay? But you do. You have two choices, and that's it. Do it yourself or trust someone else to do it for you. That's it. There is no third option. All right. Makes a lot of sense. Thank you. All right. Got it. Okay. I got some more questions down here. How long have you been trading? Since the 1990s. You want to hear something? I've been trading since, yeah, thank you, Mandy. I was trading when it was $250. I'm going to write this number down. You ready? Because I don't think a lot of you understand this. The commission when I started, the commission just to buy and sell was $250 per trade. So if I wanted to buy IBM, it cost me $250 just to call the broker and tell them to trade it. Okay, I've seen it go from 250, it cut it in half, 125. It was 125 like for a couple months. Then it dropped to 119, then it dropped to 97, then it dropped to 70, then it dropped to 60, then it dropped to 50. Now it's almost free. You can actually trade stocks for free. I started when it was $250 a trade. Yeah. Just holding and wait. No. I don't hold and wait. I actively trade every single week. I'm retired. I got nothing else to do. I spend 5 or 10 minutes taking a look at my phone. Oh, CHSN is a 2-cent? Hell no. If it's 2 cents, there's no possible way on God's green earth it's got 2 decades of profits. No way. No way. AJ Glory, Google only has 2 dividends. 2 years, that's it. 2. 18 more years, then I'll take a look at it. Can we look at the stocks on the dividend calendar coming up? Sure, why not? Here you go. Whoops, let me get rid of this. All right, so here we are today. This is today. This is all the stocks paying dividends tomorrow, having EX dates tomorrow. Whoops, do that again. Come on. Okay, you want to see them all? Here you go. This is today. There was 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. 18. 18 companies today. How many tomorrow? 4, 8, 12, 14, 16. 16 tomorrow. How many on Thursday? 4, 8, 11, 15, 16. Friday, there's 56. Sorry, 55. 55 on Friday. And what do we have next week? 47, 32, 102, about 20, about 22. So there's 100 to about 225, 230. 230 companies next week paying a dividend. I will never touch, hasn't been negative again. What's your biggest loss? My biggest loss is $91,000 in 1 week. I lost more money in 1 week than some people make in a year. It was eye-opening. As far as I know, I'm the only person that got a call like this. I'm the only person that I know that got a call. Now, usually when you call, the broker says, hello, we need to verify. My condolences. I know the pain. Yeah. Usually, yeah, hold on a second. Usually when you call your broker, it says, good afternoon. Let's verify what's your name, what's your number, what's your address, what's your date, blah, 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 blah. Okay, no, nothing like that at all. The phone call went kind of like this. Afternoon, Mr. Gardino, you're done. That was it. No hi, no hello. Can we verify you? Can we do this? Can we do that? No. Mr. Gardino, you're done. That was it. We got to sell up all your positions to cover your losses. 91,000. I thought I was smarter than I actually was. There was a company called Real Networks, RNWK. RNWK. Now, you probably never heard of them, but the first company to do online video, streaming video. That was the first company. They jumped $45 in 1 day with no news. Okay? The previous day was like 20 bucks. The previous day was like 15 bucks. So within 1 week, this thing jumped up $70. So I'm thinking to myself, ooh, Monday, they're going to have profit taking. So I piled everything. I bought calls, I bought puts. Guess what? Come Monday, it shot up another 50 bucks. And I got the phone call. Yep, you're done. So from that point on, never, ever, ever will I put all my money into one trade. That's why you say never put all your eggs in one basket. I put all my money into that one trade, lost $91,000. I didn't sleep for a week on the couch. Okay? A lot of you know what that means. Yep. Yep. No. When there's profit taking, you sell calls, you buy puts. Okay? Biggest upside this week? I have no idea. 2008 took everything from me the first time, delisted, took my stock investments the second time. Sorry about that, brother. Sorry. All right. So over the 30 years of my trading, I learned a lot of interesting things. Number one, don't put all your eggs in one basket. Number two, don't think you're smarter than the market, because the market will humble you really quick. Okay? Also, it ain't a profit until you take it. Also, not a loss until you take it. Just learned today, lost all cash on one trade, went put, but it went call, skyrocketed. Nope. I lost 557 on WhatsApp group. Ouch. I don't feel so bad. Okay, luckily I've been blessed with my current firm more than I could imagine, but like I said, I am okay, looking for diversity, great. Only problem is you need a lot to do what you're doing if dividend king. AJ, I'm going to disagree with you. Okay. Now, like I said, AJ, I'm creating a trading strategy specifically for my 6-year-old grandson. He's 6 years old. I'm creating it specifically for him in conjunction with Robinhood. It's just like a video game. It's simple. It's easy. So let me finish up some of these questions we have down here. I want to start with 1,000. Yeah, you can do that. Yusufer, I lost $100, but still, money is money. Now I spread my trades. Cool. Datos, Camille, what's your story, sir? Did you work? No, I did not. Okay. You like Robinhood? Of course I do. I like the platform Robinhood, not the stock itself. Stock itself hasn't been around long enough. Did I work at the Nook? No, I did not. I learned through the School of Hard Knocks. Basically means I lost a whole shitload of money, because you make money after you learn the lessons from losing money. Okay? So yeah, you make a lot of stupid mistakes and you learn not to do those again. It's like that $91,000 loss taught me never put all your eggs in one basket. Okay? And when my 9-year-old says, Daddy, can you teach me? Oh, I got a hat and mustache. Ooh. So when my 9-year-old said, Daddy, can you teach me? Well, she started averaging 5% per month. Now, for some of you, 5% a month, that's 60% at the end of the year. And she was 9 years old. She's never done anything. Well, it's easier to teach someone who knows absolutely nothing, because rule one is never buy something not on your list. The only thing on her list was dividend kings, dividend aristocrats, dividend champions, dividend contenders, anything on Warren Buffett's list. It's only 350 companies. That's it. You put it into the calendar will tell you exactly when they're paying their dividend. Okay, right here, right there. All right, these companies right here, give it a second. All right, almost. How can I join Discord? AJ, Aljori, the Discord is a paid group. Now, I'm not trying to sell anything, but you asked, and the Discord is part of the paid group. All right. What's taking so long? Oh, it's going to populate in a second. M32, post the Discord link, please. Like I said, just make comments. He seems to know his stuff, but he needs to mirror his screen, realize it's backwards for viewers. All right, I'm going to tell you something that I tell everybody who says the exact same thing that you're saying. Okay, I just make comments. Okay, I just make comments. If you know something that I don't know, more specifically, how do you invert the camera on the iPhone selfie camera in conjunction with YouTube? I get over 2,000 videos on YouTube, and I answer this question every single night. It's backwards for a reason. How to fix it? I have no clue. I've been doing this for over 30 years. On YouTube for over 15. If there's a way to invert it, I'd love to know. But every person who mentions it doesn't know the answer. So if you know the answer, great. Thank you for pointing it out. All right. Mile High Process, Dividend Stock Talk channel is him streaming his screen instead. Much nicer, thank you. What is the strategy? B, you ready? The strategy is very simple. I invest in pre-qualified dividend stocks. Those are companies that have increased their profits for at least 2 decades, buying it just before the EX date because stocks have a tendency to increase just before the EX date. Then I use what's called a covered call, a simple, safe, predictable strategy that allows me to jump in, jump out, make 1% every single week. That's it. 1% a week goal. Yep, there it is. Dividend champions, contemporaries, aristocrats, and kings. Yep. Buy a week or two before the EX date. Exactly. Pretty simple. Thank you. What about what I think about OWL? We'll take a look at it tomorrow because we're past 11. And I've always said if we're above 200 people, I'll stay on longer. So I'll stay on longer. Why not? All right. Sideways works well, absolutely, for this strategy. Down is what I'm currently struggling with. Here's the thing. All right. I don't like when people do this. All right. Jason, thank you, Jason. And Al, thank you. All right. So, yes, sideways is perfect. I like stocks that don't move at all. Because the nice thing about stocks that don't move at all, you know what they're going to do next week. Not move at all. Everything is backwards. Yes, Chris, I'm aware of that. If you know how to change it, Chris, let me know. How do we learn? I'm here every night. Sunday, Monday, Tuesday, Wednesday, Thursday. 9 till 11. Well, right now we're going past 11 because we have over 300 people here tonight. So that's why I'm late. It's his other stream on YouTube. Yes, I have 3 YouTube channels. Okay, 2 TikTok channels. Wait a minute, 3. 1, 2, 3. Yeah, 3 YouTube channels, 2 TikTok channels. Twitter, Instagram. No, not Instagram. LinkedIn. There you go. LinkedIn, Rumble, Twitch, and a few others. Yeah, about 13 different platforms. Love the content. Thank you, Chris. Spades player, what's happening? Uh-oh. Okay. How do you evaluate Intel given weeks ago you said no to Intel and personal my goals are? Okay. Now, did I say no to Intel or no to Intel this week? Okay, that's what you call selective perception. You listen to what you want to hear, or you hear something, you don't hear the whole thing. I love Intel, I have Intel. Okay, every once in a while, when it goes up, great. When it comes down, no, I'll wait. Okay, I go in, I go out. I go in, out. I don't buy and hold forever. I buy and hold for a week or 2, maybe 3. Longest I've ever held anything is 18 months because it paid me 1% a week for 18 months. Count it out. How many weeks are in 18 months? So it's 52 plus 26, that's 73. 73 weeks in a row, it paid me 1% or more. Well, Intel's basically the same way. But when it goes up, great, I want to be in. But when it's at the top, it's at a 30-day high. No, it's a no. Because I don't buy at the high. They go up, they go down, they go up, they go down. That's it. So it may be yes this week, and maybe a no next week. But I do love Intel. I do. Because there's some company that is just plain a flat no. Hell no. PLTR, hell no. VOO, hell no. Certain companies, hell no. But Intel, yes, sometimes, no, sometimes. What is it doing? Is it going up? Is it going down? Because that's all they do. They go up, they go down, they go up, they go down. That's it. Just jump in at the right time. Why isn't this thing doing anything? Oh, that's why I didn't press the stupid button. I didn't hit the button. My own fault. What else we got? Quick review of the names for the night. We'll get there in a second. Hold on. Luke, I'm your father, Luke. James, what's going on? You probably hear that all the time. What's going on with the market? You think there's going to be a correction soon? There's always a correction coming soon. Luke, I'm kicking myself for not shorting DJT. Everything he touches goes bust. Okay. Hey, James, are all your covered calls really unaffected by all this really going on? No, because I have some stocks that are down 50%. I have some stocks that are down 33%. I have some stocks that are up. I have some stocks that are down. That's all they do. They go up and they go down. Ooh, Loops, I like international paper. I do. But we're not going to look at any more stocks. I'm just answering questions tonight because we already found the 5 for tonight. But tomorrow night we'll take a look at international paper. So take a look at this, okay? The stock market's been around for 400 years. What have we seen over the last 100 years? World War I, World War II, Vietnam, Korea, the Gulf crap. Market collapses. We've seen the stock market bust in 2029, the Dust Bowl of the 30s. The 40s we had, World War II during the 40s. The 50s was Korea. The 60s was the Vietnam. The 70s was the gas embargo crap. Okay. The 80s, the 80s were awesome. The 90s we had the dot-com bust. Yeah, 10,000 congrats. Thank you. Oh, holy shit. Nice. So stocks go up, stocks go down. If I'm only looking at companies that are consistently profitable, regardless of what's going on, okay, think of it this way. You got some companies that have been profitable consistently for 5 decades, 6 decades. There's even a couple that has 7 decades. 7 decades of consistent profits. Why wouldn't I buy those? Because what have we seen in the last couple of decades? We've seen a lot of shit. But these companies are still profitable. I don't look at companies that don't have historical performance that favors what I'm trying to do. Simple, safe, predictable, consistent, 1% per week. That's over 50% per year on safe, predictable companies. Look at Consolidated Edison. They've been in business for over 200 years. Procter & Gamble, over 140 years. Johnson & Johnson, over 140 years. Coca-Cola, over 140 years. Wells Fargo, over 100 years. Harley-Davidson, over 100 years. General Motors, over 100 years. Ford, I could do this all night long. Companies that are in business for decades and for generations, those are the ones that I like. All this new shit, Palantir, hell no. NVIDIA, double hell no. You see the numbers on that thing? No, either it makes sense or it doesn't make sense. Either profitable or they're not. There's no two ways around it. It's not like, okay, well, they're profitable. No, consistency of profitability. That means every single year for 2 decades. That's 20 years of increased profits. Some companies I won't buy just because they haven't been around long enough. It's your money. You do what you want with it. I'm just showing you what I do with my money. It has to be a safe, predictable company. It has to be consistently increasing its profits. And they got to have weekly options. I have 2 criteria. That's it. 2. 20 years of increased profits and weekly options. That's it. There's not that many. It's only about 300 of them. What else do we have? A couple more questions. Asking because it seems it's just easier to own the underlying stock in this environment. Yes, but are you creating cash flow from the position that you're in? Every position that I'm in, every single one is bringing me in something. And that something has to equal to at least 1% per year. So if I have a $100,000 account, I want $1,000 a week. If I have a $5,000 account, I want $50 a week. If I have a $10,000 account, I want $100 a week. That's it. 1% of whatever I got, because 1% of whatever I got comes to 50% by the end of the year. And that works for me. Okay, BK. You aren't making squat after fees and taxes, and this is nonsense. Ooh, I love people like this. The uneducated few. And do you know why I say that? Because there are at least 5 states where there's no corporate income tax. No corporate income tax. So you're under the assumption that I'm holding my account in my own personal name. Oh, hell no. That's the highest taxation there is. If my account is in the name of my corporation, well, now I'm at the corporate tax level. But if I am incorporated in a state where there's no corporate income taxes, guess what my tax rate is? 0. Then I live in the state of Florida. There's no personal income taxes in the state of Florida. So my corporation pays no taxes, and I personally pay no taxes. It is your right, it is your duty to figure out how to pay 0 taxes, but you got to figure that one out. Do some research. There's plenty of research out there. The answers are there. You just got to look for it. How much does it cost to make an LLC? That would depend on which state you do it in. Okay, because New York has a different fee than North Carolina, North Dakota, Wyoming, Delaware. My corporation's in Delaware. I think it was $149 when I did it many, many years ago. But BK Advocate, thank you for that. The leverage shares are cheaper. Isn't it funny? Yes, leverage shares are cheaper, but you got to remember, more risk, more reward, or more reward, more risk. So yeah, I do have some TSLL, and I think it's a 3X. Yeah, I don't have that many of them, but I do play with it. In this strategy, you have to own the underlying stocks. Absolutely. The red dirt. What's happening, red dirt? Joey, BK Abacus, I don't agree with this comment that you aren't making squat. The challenge is what you're expecting for income and what your plan is for this. Good. Now I'm going to agree with you because we're all on a different journey. My journey is different than yours. Great. Well, what is your journey? Well, that's a you thing. Several questions you need to ask yourself. Number one, does it make sense? Number two, do I like this company? Number three, do I like this company at this current price? Number four, can I and will I consistently sell a covered call every single week? Number five, do I commit to never, ever, ever selling at a loss? Mandy, you should look at Mac Enterprises. He will teach you how to do your taxes. Mandy, you're under the assumption that I pay taxes. I don't. Taxes are strictly voluntary, and this is not a topic I want to talk about. Okay? Do your research. You're on TikTok. Great place to look for taxes and tax information. Taxes are strictly voluntary if you feel this. Right on they always say the 16th Amendment gave us the right to do it. Yeah, it did. But read it slowly. Seriously, read it slowly. It gives the government the right to tax on several states. Key word, several, not all states. Okay? And then look in the book. Where in that 2,500 page book does it say taxes are mandatory? Nowhere. Where does it say in that book that taxes are voluntary compliance? Whole shitload of places. Also in that book it says any money given to the IRS is to be considered as a gift. It's in that book. Read it. Anyway, I'm not here to talk about taxes. That's a you thing. Talk to a tax strategist or tax planner to help you figure it out. CF 111. For instance, you should decide if you are doing this for growth or income. I'm 62. It's 100% income. 100% income. I could care less about the growth. Second, are you looking forward to keep the stock? Hell no. I got married once and no intention of marrying a stock. If it goes up, I'll sell it at a profit. I refuse, literally refuse to sell anything for less than I paid for it. That's it. If I buy IBM at $100, cold day in hell, I'll sell it for less than what I paid for it. That's it. I'm seeing everything backwards. Yeah. If you know how to invert the screen on the selfie camera of an iPhone coupled with YouTube algorithm, fine, let me know. Until then, enjoy the best you possibly can with what you're working, or go to another channel. I'm live streaming on 13 channels. Okay? The only reason I'm on this one is because I've been on this channel for almost 20 years. All right. For instance, I have 100 shares of MU, Micron, in my IRA. And I knew I wanted to keep the shares, so I did a covered call on them at 640 strike. On those two contracts, I made 2.8 for the month. I'm not seeing the problem. You got Micron, you want to hold on to it, you did covered call, you made 2.2800. Great. I applaud you. Wonderful. Keep doing it. Micron pays great great premiums on their options. They don't have any, they don't have any dividends, but they pay great premiums on their options. Okay. I took the money and reinvested it. I didn't expect MU to get to 640, so I quickly did a roll to 740 today as I want to keep the shares. I believe it will be $1,000 stock. Okay, if you never sell, there's nothing wrong with it. But if you keep consistently selling covered calls out of the money, you're bringing in something. Nothing wrong with that. Don't forget to click the save on your money. All right, automation, thank you. Good day, James. Oi, what's happening there, mate? Okay, John Jingleheimer Schmidt. Go ahead. Are you into crypto? Yes and no. Now, I'm creating my own crypto because I don't trust the government with my money, so I want my own money. That's coming at a later date. But I don't buy and sell it. I heard a Ponzi coin was about to pump to the moon. My God. Yeah, I don't do any crypto unless it has something utilitarian behind it. That means, does the company behind it stand for something? Because cryptocurrency basically is just a wink and a nod from somebody you don't know. So you're trusting your money to somebody you never heard of, and you don't even know if he's Big Bubba on death row. You don't know. So my cryptocurrency, well, my company makes an absurd amount of money, and I'm backing my own cryptocurrency because I want everybody associated with me to use my own. Because once you create your own, if you have something to support it, fine. Most cryptocurrency don't have anything behind it. eBay, Sweden, I like eBay. Okay, John, there's more than one way to skin a cat. You can use the mirror. Yeah, I have 9 phones, 9 iPhones. You want me to do 9? Yeah, no, that's not going to work. I'll have to use OBS, as I actually have OBS. OBS is down here running 5 different streams. Okay, so I have 5 streams here, and I got 9, wait a minute, 1, 2, 3, 4, 5, 6, 7. 7 phones in front of me. So I got 7 iPhones in front of me. Wait a minute, 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 iPhones in front of me. 2 of them aren't on at the moment. But I'm not going to do mirror on all of them. So my setup is kind of interesting. I had 9 cameras here, then I get OBS down here going to another 5. So yeah, I see what you're saying. I understand what you're saying. There's got to be a way of streaming, but no. And you can't do OBS on 3 different YouTube channels. You can only do 1 YouTube channel at a time on OBS. And I am doing 1 channel on OBS YouTube. The other YouTube channels are not on OBS. Okay? But if you know a way to do it, fine. I'll be more than happy to listen. Next, my point on your $50 strategy is that you are going to do a covered call. No, that's not what I said. I'm going to do dividend capturing 2.0 on the $50 trading strategy. Okay? The dividend capturing strategy is basically almost the same thing. Because you see what the stocks are? Johnson & Johnson. Damn it, where's my pen? Here, it's right here. Look, Johnson & Johnson has a dividend on the 26th. So if I put $5 into Johnson & Johnson tomorrow, stocks have a tendency to go up just before the dividend. So tomorrow is here. The EX date is here. So that's a week, that's almost 2 weeks before the dividend. So how much am I looking to go up? I'm looking at 1.25%. Great. Once it hits that, I'm out. And now maybe I'll jump into Lennar or Genuine Parts Corporation or Sherwin-Williams. There's over 5,500 different companies paying dividends. And if they consistently go up before the dividend, that's a lot to choose from. Okay, and if I put $5 into each one, if it goes up 1.25%, great. I jump out and then jump into the next one. It's actually that simple. You buy this one, and then you buy the next one, and then you roll into the next one, and you roll into the next one. It's a game, and I do most of my trading in my car when I'm at a traffic light. At a traffic light, pick it up. All right, what did I buy? What did I sell? Blah, blah, blah. There we go. That's it. Use a mirror. Thank you, John. That ain't going to happen. Bought eBay the 25th. Okay, got it. Quick review of tonight's. We're going to get to that. I do covered calls for some part of my strategy. Okay, cool. I got PSA with the $3 dividend. Oh, okay. Not a question. That's more of a statement. But I also do swing trading and other option strat. Okay, not a questions. What happens when COMEX vaults go empty of registered silver? Sorry, what book is this? Sorry, what book is this? Great show. I've actually written 15 books. Okay, so I really can't answer the question which one. And what happens when they figure out there's not enough silver to cover all the contracts? Raw silver is supposed to shoot to the moon because silver is not something they mine for. Silver is a byproduct of the mining process. So if they're looking for gold, great. Well, they get a byproduct of silver. It's a byproduct. It's not something that they're mining for. It's like when they're mining for cobalt or copper. When they smelt it all down, well, a little bit of it's silver, so that goes to the side. So they don't have enough silver for the demand that we have for silver. So it ought to be interesting to see how it plays out. But believe it or not, that's the last question because there are no more questions. Uh-oh, Miller just threw it in there. Thank you. I will check your books out in purchase. All right, cool. Well, book number 15 is not available to buy yet, which is kind of weird because I finished it a year ago. I just haven't put it online yet. All right, so no more questions. So we're going to call it a day. Now, guess what? We're going to do this exact same thing again tomorrow. All right? Thank you. So you can keep your stocks and keep the premium if you don't want to sell it. I ask myself 5 questions every day. 5 questions. What did I buy? What did I sell? Where is it? Where is it going? What should I do next? That's it. If I buy IBM at 100, where is it now? What did I sell against it? What should I do? Do you recommend Nike? I don't make any recommendation. Why not PLTR? Take a look at the dividends. How often have they increased? Okay, there's 11,040 different companies. What makes PLTR so wonderful? It's a serious question. Take a look at the numbers. What's the earnings per share? What's the revenue coming in? What are the dividends? Are they increasing or are they decreasing? These are serious questions. Just because they say, oh, you got to buy PLTRs. Go, no, you should do some research. How consistently profitable are they? Are they making money every year? K-Van, home, how was the trip? My trip was interesting. Okay. So that being said, we're under 200. That means time to go. So you guys have a great day. So you keep your stock, blah, 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 premium you don't want to sell. I didn't say that. What I said is I refuse to sell at a loss. If I buy IBM at 100 and I sell someone the rights to buy it from me at 100 and I collect a premium from that, which is more than 1%, if they want to take it away from me, fine, take it. I'm not interested in owning the stock. I'm interested in the cash flow. The cash flow. I don't care about the stock. The stock is just a vehicle to get me the cash flow. All right? So, that being said, we need some mood music, and that, hopefully, this will open up. There it is. So, we're going to call it a night. We're going to do this all over again tomorrow. And hopefully, tomorrow, my internet will be a little bit faster because I got a lot of cool stuff. So, have a great night, everyone, and we'll see you again tomorrow. Tomorrow, we'll see you tomorrow. And now the end is near, and so I face the final curtain. My friends, I'll say it clear. Ooh, I'll state my case, for which I'm sorry. Ooh, review, yeah. Sit tight. MRK, Texas Roadhouse, ExxonMobil, Home Depot, and McDonald's. There you go. Have a great day. Come on, turn off.